All right, I guess we're live. Can everybody hear me okay? I'm solo. Maybe Gerry will join later, or maybe even Matt wants to join. And in this live stream, I basically just wanted to go over, some charting, basic charting, some looking at a little bit of basic technical analysis. Either basically, what am I going to look at before I even put an options trade on? Just to kind of give me a slight edge on whether or not I feel confident in the trade. I don't look just at probability in the money. I'm looking at the chart as well. It literally takes 5 seconds, and it can put just a little bit of a slight edge in favor of your trade. And I think it's important to do. It doesn't take much time. So why not do it? And that's kind of what I'm going to go over. I'm just going to go over a bunch of examples of actual positions that I actually have in my spreadsheet and actually on right now. They're actually live trades. They probably expire sometime this month. Could be this Friday, could be next Friday. But I know it's Super Bowl right now, and fortunately, I did push it back an hour, and just I thought it'd be over by now. The NBA finals are literally like the games last 3 hours, 2.5, 3 hours. I didn't realize that the game would last 4 hours. So I apologize for that. Maybe next week we can get back to full steam. But yeah, F Super Bowl. I'm not a big football fan, but I mean, it was an entertaining game, at least the first half that I did watch. So my team's winning, and not that I have a team, but the random team that I selected won or is possibly going to win. So that's good. Hi, Rebecca, Quest of Fire. Glad you could join. Hopefully, you didn't have to wake up early or something for this. And Frank, welcome. All good. Is just a little supporter that it doesn't matter. It could be literally the end of the world happening. She'll still join a stream. So as long as it's not during her walk time, she's good to go. Let's see. Blake, how do you discuss what do you do when something like March happens? That's a good question. When the market drops so much, so fast, you just take all the shares from your short puts. That is that's a tough one because what happened there is not normal. Welcome, Stock Ninja. That is not normal. So February had that big weekly decline. It was like a 10% in 1 week. It broke a record pretty much. That would have pretty much probably put everybody in a precarious, there we go, that's the word I'm looking for, precarious spot, right? A lot of my positions I have on right now would be in a precarious spot if a March or February of 2020 happened again. Luckily right now, if you looked at my actual portfolio, which I could probably pull up, let me see if I can figure out how to share that. Let's just share screen. Let's see. Yeah, it's not going to work. Well, let me share it. So fortunately, we'll share something else. But I do have a lot of positions on. A lot of them are in the green right now. Like I'd say that 80% of them are in the green right now. So, I mean, I could take stuff off real quick on Monday if things start looking bad. It'd take a pretty big decline, even more than 2%, 3%, just on Monday to put me where all those positions won't even be green anymore. So I'm already planning on taking a bunch of positions off on Monday anyway, because I went in hot over the weekend. And that's typically what I like to do anyway, just to try to get that decay, free decay over the weekend. But the thing is it's always hindsight's 2020, right? You don't know whether or not you're going to have a March 2020 all over again, right? Until it's too late. So I'm just banking on that we're not going to have a 30% plus decline for at least the next 5 to 7 years. That's just probability. I mean, I guess that's history. That's just, back testing. I don't know what you want to call it. Will we have a 10% or 20% decline? Yeah, we'll probably have one of those, of course. But I just don't think we're going to have a 30% decline anytime soon. I mean, if we do, then we do. And obviously, look at my positions, evaluate. I'm in really strong positions. I'm not really in any junk. I'm not in any GameStop, Nokia, AMC, nothing like that. Let me see if I can actually share out my portfolio. I know I can't share out the platform for some reason, but browser blocked your screen. Well, great. This is not going to work. Yeah, I don't know what it's asking me. It's asking me something funny. Maybe Matt knows. Your browser has blocked your screen. Click the screen icon in your address bar to allow access. Screen icon. I don't have a screen icon. Matt, do you know what that is? Wait, hang on. Found it. I think. Share screen. Rats. That's part of what I wanted to do this. Oh, wait, maybe I found it. That's part of what I wanted to do this particular. Never mind. That's not going to work either. Rats. Shoot. I wanted to share my screen just to show you some technical analysis here. And it's not going to, and I don't know if I can figure this out on the fly. Temporary blocked. How about now? Can you hear me now? Give me a thumbs up if you can hear me now. I think it's delayed. Okay, great. Sorry about that. I was trying to enable the screen share, and I guess I turned off a bunch of other junk anyways. Let me maximize this. All right. So I did bring up AMD here before I guess I was muted. AMD, this is a position that I actually have on in my, position I guess I have on my options account right now. And it's going to kind of go through what I looked at before I even put this position on. So this position that I put on, I actually sold a 75 strike on this. And what day did I do that? I did put that on February 3rd, so just a couple of days ago. So what I looked at is I popped up this, finviz.com. This is one of my favorite sites to go through because they draw the trend lines for you automatically. And it's got the 200, the 20, and the 50 on there, the 200 period moving average, the 50, and the 20 on there already for you. So you don't have to draw those or even put those indicators on your platform. So you can just come here. It's already done for you. So what I did is I ran a script and it just gave you the probability of the money. I looked at the 5%. And then I also looked at the chart here and saw that the 200 period moving average was right here. And it pretty much converged right at the 75 number here. And, if you look back, I put that trade on, just a few days ago. That 75 strike is about a 12% probability on the money, at least when I put it on, which gives the stock about a 15% move down in order for it to even touch that. But part of the reason why I put that particular strike on was because it touched here, it touched here, it touched here, it touched here. So that's a sticking point, right? Not only are these three sticking points right here, this 200 period moving average is a really strong support line. So can it go below the 75? Of course it can. It most likely would stop there and maybe go up and then come back down, but it's probably not going to blow through that right on the first time. Yeah, it might drop down and then close the day at 75, but that 75 is a pretty strong support line, just going back 6-7 months here. And, the 200 period average is a strong support line as well. With that said, you do have a gap right here. So I would look at that 75 eventually failing and then the stock closing that gap down here at the 70. But, looking here, when is that position? So that position has a 26 DTE on it. Is the stock going to drop down to 75 in 26 days? Yeah, very well could. It's AMD. It's already up 78% in the last year. It's down actually for the year to date, 4%. But I don't think it's going to drop down, not unless the market drops down. And that point, pretty much every position I have could be in a precarious spot anyway. But that's what I was thinking on AMD. So let me pick up another one here. If you guys want me to look at one specifically, just pop in the ticker inside the chat, and I'll look at it here in a second when I go through a couple more of these. So I'll try to go through them a little bit quicker. Here's Intel right here. My target was 54. Once we close that gap right there, I should have actually bought a leap. I did not. I do actually have an Intel, I think, on right now. Let's see here. Yeah, I do. So I sold one on February 3rd. It expires on March 5th. So it's 26 DTE, same as the AMD. And I figured those two stocks would be lockstep, reverse of each other. And I guess not lockstep. They're reverse of each other, right? If AMD is going up, Intel's probably going down. If Intel's going up, AMD is going down. So I did sell to open a 52 strike on Intel. So that's below the support line here. The support, see this kind of going back here, support there, support here, right at the 54. So I kind of got below that, right at the 52. Look at their support there, their support there, support here, support here, support here. So 52 is a good number for me, right? And in the worst case, might drop down to 48, right? And at that point, I don't think it's going to hit in the next 26 days. It's not going to probably drop through 52 and hit 48. And the worst case scenario is I can roll it down to 50 or 48 if I need to and still be okay. So that was my thinking on the Intel trade there. And that was a 14% probability in the money on that one as well. Let's see, is there any questions here? Because I can't see the screen while I'm doing this, so I apologize. Let's see here. You guys have the camera. You can see the screens, right? Okay. All right, let me look at another one here, and just wanted to make sure you can hear me and make sure you can see the screen. Because when I'm doing this, I'm looking at the screen. I can't actually see what you guys are seeing directly anyway. So, okay, let me pop another one up here. Like I said, if you want me to look at one specifically, pop it in. I got to scroll down here. Pop it in. VCRs are a thing of the past. Nobody uses those anymore. Just kidding there. I'll look at that one here in a second. Let me pop another one up. Let's just look at Tesla, because that's a pretty common one that I do. So let's see, Tesla. Here's Tesla right here. Let me see. Do I have one open on Tesla right now? Yeah, I do have a Tesla open right now. So I sold a 5-day, it was a 7-day DTE on, it expires this Friday. It was a 675 with a 3% probably in the money. So a 675, that's a little higher than what but my thinking was it's only 5 days. I have a weekend thrown in there, right? So it's Monday through Friday that I have to worry about. And I wanted to get below this 50 period moving average right here. And also, there's a little bit of a strong, I wouldn't call strong, kind of like a minimal support right here, right? We have a double top, hit there, and then kind of busted through it. So yes, for 5 days, it most likely would really probably get stuck right at this 50 and maybe even at this 700 or so. And I'm below that at 675. So it would take quite a bit of a stock market move on the downside in order for me to probably get in jeopardy of being in the money at 675. Normally normally I'd try to get down here by this 500 or even below that, maybe this 450. There's where this 200 period moving average is. But It is what it is. It was such a short DTE. I felt like the 675 was safe. It's a little bit more riskier than what I would normally do, especially on Tesla. But like I said, I try to get normally around this 500, 4 to 500, right? We got support here, and we got this big trend line here as well. If you get below that, even better. If you get a decent amount of premium out of it. The thing is if the stock, Tesla drops down to 500, there's going to be so many people buying the stock. It's going to be crazy. So I don't think it would make a beeline directly from where it's at now down to 500 in a week. I just don't see it happening unless, Elon Musk does, smoking something. So, so that literally at this point, it takes a 20% move in order for me to be in the money. All right. So 675 is a 20% move down. Can Tesla do that? Absolutely, it can. I'd say, 2 or 3 years ago, a 20% move down would be more common. But I just, today, I just don't think it's as common, even though this, stock is way overvalued at this point, in my opinion. Look at this PE here. Forward PE is crazy. So I do think it's overvalued. But yeah. Yeah, watch out. GM's eating their lunch. Was there any, so VGT, let me look at VGT. Somebody asked about that one. So I do have a huge list here of other ones I could go through. VGT and VCR. Let me pop up VCR. Here's VCR here. So this consumer discretionary, Vanguard. This is probably only monthlies too. I don't know for a fact if it is, but I'm pretty sure it would be. If if VYM is a monthly, this probably is a monthly as well. Not all of the, I think some of the spiders are monthly. The spider sector ETFs are monthly, but not all of them are. So VCR. So when it comes to something like this, you have to evaluate it a little bit differently because there's a lot less risk here, right? So you're probably gonna have to come up to the 10 or 15% probably on the money, which is probably sitting right here at this number right here. So this 280, that's probably where I would look at this one at the 280, figure out how much premium is there. You got a little bit of support there, a little bit kind of like a resistance there that popped through. Not to mention if you do, parallelized this trend line right here and kind of just drew it out sideways and copied it and then just drag it down, it would probably come up to right where this 280 line is or so, converge literally right where the 50-period moving average is. So that'd be a pretty good number. Maybe 2 weeks out, maybe even a month out, I'd feel safe with this because it's consumer discretionary, which is very defensive. So I would feel comfortable right around that 280 mark. I don't know what the premium is there right now because I don't have anything open to check that out, but that's where I would look. If you got to go out a month, that's fine. If you need to go up to like 282 or something, I think that would even be okay as well. Let's see here. What was another one? VCR. I don't know what VCR is, but let me pop that one up. We used to call those video cassette recorders or something like that back in the day. Oh, I'm looking at VCR. Excuse me, VGT. VGT. Oh, okay. Yeah, I've traded this one. This is one of Gerry's, the Hill trade as well, or VGV or something like that. But yeah, this one's a good one. Same thing on this one. You can almost see the line already parallelized there as it is. Upper trend line, lower trend line there. It's an upper channel, which technically upper channels like that like to break to the downside, but it would probably end up coming down and then hitting this lower trend line and before it goes back up. But you're not going to get down here where this 300 is, this 200 period moving average is. Save that for a ETF like this. I mean, you're going to have to, I would say what I would probably do is probably try to get near this 340 because you got to, literally we hit it here, kind of stuck there. We kind of stuck here. We kind of stuck here, hanging right around that line right there, right? So if you can get the 340, out a month and it's some decent premium there, then I would shoot for the 340. If you can't get decent premium out 30 days at the 340, come up a little bit, maybe come up to where this line is right here. So maybe 345. If you can't get anything there, then I'd probably try to look at about right here. So the 350 number, and see what the premium is there. So you're still below the 50-period moving average. ETFs are kind of tough because they're just not as risky. So I'm going to give a little bit more leeway to an ETF like this. I'll give it a little bit more room, or a little more probably the money come up to maybe the 15%, maybe even 20% on something like this. Can you get hurt in it? Yeah, but you're not going to be hurt very long in it, and you can just go out and longer in the days to expiration if you need to. It's the single stocks that need to be kind of looked at with a little more scrutiny, I think. Oh, is there any other? Yeah, GameStop. That's definitely not one I'm not going to go over for sure. Is there any other tickers you want me to? Do you ever buy in the money puts? No, I don't. Is there any other tickers you want me to go over specifically? Because I can pop other ones up. Let me actually just pop a couple other up. IPOE. Yeah, I'm not familiar with that one. I think that's a Matt Money special. Is that IPOE? Isn't that another ETF? IPOE. Ah, shit. I'm not gonna touch it. Sorry. It's just not been out long enough. There's really nothing there to look at. If I was gonna be doing this one, I'd be down. I would be at this $12 mark. That's where I would want to be. I would want to be way back down here before we had this big old pop up. That's where I'd want to be. And you're not gonna get shit there probably. So, excuse my English. Okay. Let's see. Let's pop up Baba. Baba's a little bit more riskier one, right? Here's Baba here. Do I have a Baba on right now? Let's see. Yeah, I have a Baba on. So I have a Baba on right now. Expires on March 5th. All right, 26 days. I think it was 28 days total DTE there. Longer than I would normally want to do, especially on a stock like Baba. Baba is like one of the best Chinese companies you can trade in the US, by the way. All right. Maybe the next one after that might be like Baidu or something. But Baba is literally like the top-notch Chinese stock that I would probably ever trade. Only one almost I'd ever touch. So I did give it quite a bit of room, almost 30 days, 28 days DTE. I went with a 5% probably on the money. Okay, so I went with a 215 strike on that. All right, so 215. All right, so what's my thinking there? So first thing I did is I looked at the chart and said, okay, I want to be below this. I want to be below this trend line right here. All right, and so that's 220. And I kind of want to be down near this trend line if it blew through this trend line here, which should be support. But it's got to get through all these moving averages first, right? It's also got to get through this little bit of sticky point right here, right? You got sticky here, you got sticky here. Okay, that's 240, so it's going to kind of hang around there too, unless the Jin Jinping or whatever his freaking name is, wants to manipulate the stock market, which he does. Then he could obviously tank this thing if he wanted to very easily. But that's going to be a sticking point. In most cases, 240 is going to be a pretty good support line. Like I said, sticky here, sticky here, sticky here. Back, I could pick up a weekly here and go back even further, right? Look at all these sticky points right here, right around that 265 area, right? So that's sticky there. If you went back monthly, it just gets too convoluted. But let me back this up here. And it gets too busy going back that far. So yeah, you're going to have all these sticky points here with these moving averages converging, right? 240, I feel like would be a good number. You're going to get a lot more premium at the 240, but I'm going on a month. A shitload of stuff could happen in a month. So I want to get below this trend line right here. Okay. We're already below the 200-period moving average at this point. So I feel like, all right, 220 is going to be a pretty good sticking point. At the worst case, it's going to hit this lower trend line right here. I probably tried to get below that. I probably actually tried to get to the 200, and there was just no money there. Even at 5% probably the money, I feel comfortable at the 215 because I feel like 220 is going to be a sticking point. Worst case, maybe this 210 is going to be a sticking point support, and I feel like I can get out of it then by just rolling it out, or most likely it's never going to happen anyway. It's not going to get there. So that's just my thinking on BABA. Did I miss any other tickers? Let's see here. IPOE. Let's see. Is there any other tickers you want me to go over specifically on Trendline, or what I kind of just look at? Like I said, I have a whole list of tickers here that I put on that I just would, the ones I actually have on right now, and kind of the thinking that before I even put them on. Yeah, 215 is safe. Is that what you went with, Stock Ninja? I always try to keep you as the buffer. So TAN and ARK-K. Okay, so yeah, I can look at those. I do have an ARK-K on right now as well. Let's see, ARK-K. Yeah, so my ARK-K is I gave it 29 days, so I got a 29-day DTE on it. All right, and I went with a 6% probably in the money, super safe, right? I sold 2 contracts on it, and I went with 110 strikes. So let's pop that some biatch up. Let's see here, ARK. Okay, my A key is acting up on my keyboard. All right, here we go, the ARK. And this is an ETF, right? So it's a little bit safer than an individual stock. So you have to account for that. Is this as safe as a VYM, or as safe as a VTI or a VU? No, not at all. Not one freaking bit. It's not a SPY, okay? It's not a QQQ. It's probably going to be more volatile than that, so I'm going to treat it as such, right? This stock has been just melting up over the last several months, so it can drop pretty substantial. We're pretty much double topping at this point, so I would say the downside is probably more risky at this point, but I feel safer at this point going with a put than I would a call, because it pops through, it's most likely going to shoot up pretty quickly. I don't know what the top side strikes are. I'm pretty, after Stock Ninja got burned on Roku, and we called it the Roku effect or whatever, I feel like the call side is more risky, especially on ARK-K. I've been on the call side on ARK-K, and it just pushed my nerves because it just went up non-freaking stop. So I feel like I would just rather be on the downside. So I have a 110 put on there? 110. We got to literally come all the way down here, okay? And I probably tried to get down. I probably looked at the 90 first, honestly, and there's just no money there, okay? So you have the 200 moving average there. You got all these sticky points right here, right? Look at, there's a lot of sticky here, a lot of sticky here. There's some sticky there, right? So you're below that trend line right there, the $100 strike. So I feel like I try to get near that 200, that 90. There's probably just no money there. As it is, I got $50 and I'm out 30 days. And where was it? 6% probably in the money. 2 contracts out there. So I got a 110 that puts me out right here. Okay. That's 30 days to get there. All right. This stock is up already 20% year to date, 170% in the last year. It's a pretty strong stock, right? We've got the Cathie Woods. So I think it's a pretty strong ETF. It's got a lot of strong stocks in there. Can it drop? Can it drop fast? Yeah, absolutely it can. I'm just banking on it not hitting there. So that stock at this point needs to make a 26% move to the downside. It would take the market to have a pretty substantial decline, probably a 10% move to the downside in order for me to even get tested here, in my opinion. I'm not even talking about ARK-K. I'm just talking about the SPY in general. ARK-K, I think, might hold up better than the SPY would. But if there's just a general broad market sell-off, ARK is probably going to sell off. But, I just kind of took a little bit of judgment call there, right? This trend line is going to kind of melt up as time goes on. So the next 30 days, it might end up over here. So I'm not quite off from where that trend line would be. But ideally, I probably would have tried to get at that 100. There was probably just no money there. So ARK-K. Greetings, Victor. Greetings, Randy. We hope to get you back early next week, so hope you're feeling better. Welcome, Kevin, Investing in Trading Adventures and Us. We go back a long ways, Kevin. So TAN is another one of Gerry's favorites. So let's look at TAN. These ETFs are tougher. You have to give me all the darn ETFs, don't you? I don't have a tan on right now, so I couldn't even tell you. Oh, so that's kind of a good point. I don't know where the probability of the money is on this. I'd have to run a script on that probably. And running a script after hours like this, Interactive Brokers kind of gets funny. So what would I look at? And I'm not even looking at the probabilities of the money on tan. So I'm going to look at, so this is a solar ETF. So I'm going to evaluate solar, right? We got, the good old Biden in the office, right? The good old government Biden. Biden's in the office. So he's probably going to be a little bit pro solar. Since he cut, thousands of oil jobs, and they're all going to build solar panels. Yeah, right. Then I think solar might hold up more than it probably would under Trump. So I'm going to take all this into account, right? And then I'm going to kind of look at the probabilities of the money. Unfortunately, I can't look at that. So where would I want to be on this if I was going to get into this? I'm probably, the first thing I'm going to do is pop up a chart just like I have up here. Okay, look at where does this, probably in the money at the 65, 70, where's that, right? Can I get any premium down there at that 65 to 70 level? If I can't, then I'm going to reevaluate, right? I'm going to go up a little bit higher, right? I got a lot of sticky points right here at this 80 level, right? Right there, right there, right there, pretty much kind of right here as well, right? So I'm going to look at the 80 level. Is there any premium out there? The 30-day DTE, right? I don't know if this has a weekly or not on it. Fortunately, I don't have anything I can look at that. Let me see. I can pop up this real quick. I don't think this screen is actually shared out, unfortunately. It's tan. So tan, there is weeklies on it. Interesting. So I was March 5th, and we'll come down. What was I looking at? Number 65. Yeah. So I don't have probably the money's on here, but like a poor point, let's say about 4%, excuse me, a 0.04 delta is 90. So that means that the probability of the money is probably really close to that. So you're going to have to come up to the 90 or 95, 30 days out. Excuse me, that's 26 days out. So right here, you do kind of have a little bit of a support, a little, that would kind of just be support right there a little bit. But I don't know, tan very well. I honestly would try to get a little bit lower and still down at that 90. Let's see what the 90 is. You're looking at, maybe 40 to 50 bucks. That's not bad, honestly. Throw one contract in there. That's not a lot of margin hit either. Throw it down here. You want a little bit less premium out of it, you can come down to the 80. And let's see what the 80 would give you. Yeah, forget the 80. 85, yeah. 85, you might get 25 bucks out of it. You can sell 4 of those. Get 100 bucks out of it. Down to the 80. That'd feel safer. Tan's a tough one. You guys give me all the hard ones. So, Home Depots. All right, let's look at Home Depots. Or you just kind of busting Kevin's balls. My goal is to never be assigned shares. Yeah, absolutely, Gerry. Let's see here. Let's look at Home Depots because I do have a Home Depots on right now, I think. Let's see. Do I have a Home Depots on? Yeah, I do. I have a Home Depots on. So on Home Depot, I went out 23 days. Okay. And because it's Home Depot, right? Home Depot is, you have to treat a lot of these positions differently. Everyone has to be treated differently, right? Home Depot, if we look here, the beta is pretty, I thought it was a little lower beta, but it's a strong stock. Even during the recession, it was still pretty strong, right? Literally, so 2020, it dropped down to 150. That's not bad. Compared to a lot of other stocks, I mean, we thought the housing market was going to get hit a lot worse than it did. But, I mean, right now, I do have one on Home Depot. I went with a 242 strike on it, okay? What's the thinking there? 242, literally. That's all the way down here, okay? What am I thinking there, right? 20-something days out. I'm looking way back here. Am I right? Support, support, support. Lots of sticky area right here, right? It's got to blow through the 200 period average too, right? Not only that, it's got to blow through the 200 and the 50, all right? And then it's got to blow through the 200, 50 and the 20, sorry. It's got to blow through the 50 and the 20. and it's got to blow through the 200. By the time it gets down to 242, I'm going to be out of it. I'm going to be long gone. All right. So that's my thinking on Home Depot. So I sold one on that, and that was 8.8% probably in the money, 242.50 strike, 13% for being in the money at this point. I got 83 cents for that. Okay. So $83. All right, looking at blah, 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 running the Home Depot. Is there any questions that I missed up here? I don't think so. Matt, are you still there? Do you want to join and talk about what you look at before you pick one, or are you just pretty much YOLOing stuff these days? Let me know if you want to join. You can talk about what you go through. You can talk about what you go through when you're picking your stocks. You know, are you looking at probably the money? You're looking at Delta. Are you looking at a chart? Do you not look at a chart? To me, it just takes literally. I mean, I'm explaining the chart here, but I can literally glance at the chart, and it takes me 5 seconds to make that decision. I'm usually popping up the chart as I'm running my script, pop up the probably in the money, including the the return, the rate of return, including the premium and all that stuff. So as the chart's popping up, I have the script running. I'll look at the chart and say, okay, I want to be on this 200 premium average, and then I'll pop up the premium right there, the probably on the money, and there you go. That's kind of how I pick the things. There is no it's not really margin it's not margin until you're signed. So my net lick is like 170K. So I have a lot that I can cover in there if I was assigned, but I'm using like literally, double my net lick pretty much. Not quite. It's double my buying power, so 50%. All right, let me pop the invite in there for you, Matt. Yeah. IBKR. That's right, Gerry. Hopefully I didn't say. If you start getting assigned, do you always have enough buying power for everything? No, I don't. But I'm spread out, right? I got stuff out for the next 3 or 4 weeks. So there's a lot of stuff that's already like 70, 80% in the green at this point. So I can just take a bunch of stuff off. And worst comes to worst, I mean, if I have to go on margin, that's fine. Like as long as I don't have a margin call, that's what really matters, right? I can go on margin temporarily. I have other accounts I can liquidate if I ever had to, which is not something I'm going to have to do, but it's all about management. So, all right, I see you, Matt. Matt.
What's going on, man? I'm wearing the same shirt as yesterday, so it is what it is.
That's fine. I sleep in my same underwear and flip them upside down and backwards and forwards and everything.
Yeah, I haven't changed my underwear since 1992, so we're good.
How old were you in 1992? 5 years old? You were wearing Superman underwear?
I was 1 year old in 1992.
Seriously?
Yeah.
Oh man. I was like a let me see, a sophomore, or was I graduated in 94, but
it is what it is, man.
You want to talk about real quick? Well, welcome anyway. I mean, just wanted to kind of get an idea of what you go through. Do you look at a chart? Do you look at probably the money? Because I know that Interactive Brokers doesn't have that particular. I had to write a script for it. You can get it off of Robinhood. Do you look at that? What do you look at?
Yeah, that's generally what I do, man. Is generally what I'll do. Sorry, I didn't mean to echo on your side there, but yeah, generally what I'll do is I'll have my Fidelity window and like a chart open on one monitor, and on the other I'll just look at Robinhood really quick, because Robinhood has a really good job. I don't trade on Robinhood, but it gives you a good opportunity to look at all the probabilities of profit. It doesn't really show you probability of in the money, but it gives you probability of profit, which is basically just a strike plus whatever premium you're getting. And combining that with the current IV and stuff of the like, what the potential of it being in the money would be, or in the profit, I guess, would be thereafter. But like I just look at a chart really quick, and I'm like, when was the last time it got to this point in the past 6 months, a year? And if it's kind of on a bullish streak, and generally speaking, I'll look for decent moves. Like Lockheed Martin, everyone's been kind of chatting about the past couple of days.
I got
And
one of those on right now as well.
yeah, and I've made like 2 trades over the past couple of weeks, just trying to scalp it a little bit on quick pullbacks, because this is generally speaking what happens, right? It'll come down a little bit, and you try to find a good spot.
What'd you go with? I'm just curious. You're way more riskier than I'm at a 290 on that one, by the way.
Oh man, what did I go with?
You're like 310 or something.
I think like 310 or 315 sounds about right. Yeah.
But, so I'm also at on Lockheed Martin. I'm also at 30 days DT on that one. So I wanted to get lower on it.
No, I generally try to do 7 days or 14 days out.
I've been trying to do longer because they tend to print quicker. It's kind of weird how that works, but they print profit way faster.
You think so? Like they get to like 10-20% more.
Yeah, well, the decay on like a shorter ones are going to decay quicker. There's just not as much premium there.
Yeah.
They don't decay.
Yeah, I'll look at it. I think my sweet spot has kind of been 2 weeks out, but for something like very risky like a Tesla, I don't go 2 weeks out.
7 days at the most.
Yeah, 7 days on the most of that one, and I generally do that. But most stocks, I would say, I stick between the 90 to 95%. But some stocks that I think are a little bit ones that how do I say this a little bit more appropriately? Stocks that I don't want to ever get assigned, I will generally stick in the 90 to 95%. And stocks that I wouldn't actually mind owning, especially for puts, I'll do 85% probability.
It's kind of what I was talking about earlier, right? Like you have to almost evaluate every stock differently, right? Because there's risky stocks. There's like a Lockheed Martin is not as risky as like a Roku, for example, right?
Perfect example.
You have to evaluate that in your head when you're making this decision. Don't make it don't look at just the premium. So probably
I think you hit the nail on the head, man. Like I think it's specifically about, are you paying for future earnings potential, or are you paying for current earnings potential? So like something like a Coca-Cola, you'd be, if you were to get stuck with those shares,
15 or 20% on that.
Yeah, exactly. So
that's exactly a good point there. NVIDIA, it's a pretty strong It's a pretty strong stock, but it is also something that I feel like could drop pretty quickly and pretty substantial, but it is what it is. Like a Costco, we've been to a Costco. Costco that's a freaking rock. You know what I mean? Like that thing is just not going to move very much. So you can get, I do have a Costco on, by the way. So let me see what I did on Costco. Costco, I'm at a 10% probably in the money. So you see what I'm saying there? You have to look at the stocks and say, okay, well, it's Costco. It's not going to go down as much as it's defensive, right? It's not going to go down like an AMD would go down.
Yeah, this is an inside joke, so it probably won't go over well for the chat, but it'll go over well for you. I don't have the right chair to go like 70% on like a Tesla. I don't have like a chair like Randy does, so
I can get a chainsaw out to you if you want.
Yeah, I mean,
or we can get you into the same Randy surgery.
Yeah, Randy, man,
scrotumenectomy.
He's got some serious cojones, man. I don't have that sort of wherewithal to be able to see things in that much red, especially something like a Tesla. It'd be different if it was like a Coca-Cola or something that I actually truly wanted to hold, but Tesla just scares the crap out of me, man. It'll move $150 in the matter of a couple days.
That one the good thing about Tesla is it's not going to drop down to like 500 without a bunch of people wanting to buy it. You know what I mean?
Yeah.
So if you can get down there, like I know mine's higher than that, but it was a short DTE. But I would normally be way, down the 400s or try to be below 500 if I could on that. Like you get $100 or maybe more than that out of it in 7 to 10 days, then it's easy money.
I would say your and my strategy isn't too different, other than the fact that one, of course, sometimes I gamble a little bit more, like we saw in GameStop, and then two, I do Palantir and Virgin Galactic, but I also want to hold those things long term. So you're a little bit different in that respect. So it's like I'm still doing options on most of the time, things that I want to own. There are some times where I'll do options where I don't actually want to own. Like Slack was a good example where I lost money. I lost like 2,000. Yeah, when after the merger got announced, for some reason, like it wasn't fully announced yet, but I wrote
Slack's
a
a
naked
tough
call on
one.
that.
I love
Yeah,
Slack, by the way. I use it every day. But the problem with Slack is that you got Teams, and Teams is a piece of shit, by the way.
Teams is bad,
I
man.
hate
I use
Teams.
it every
Teams
day.
is just a bloated freaking piece of crap. Like I know people love it, but it's when you've been using Zoom
The
and Slack for
only
a long time,
thing, yeah, I'm with you, man.
Zoom
The
is like way better than Teams.
only reason why Teams works in our organization is because we have contracts with Azure and Office 365 and things of the like. And obviously, Microsoft owns Teams, so it just, although it doesn't do it well, it integrates.
Do you want to answer this question for Kristen real quick?
Can you, a beginner explanation, do like a rudimentary explanation on what a cover call is?
Yeah, just like a one sentence explanation. No, I'm just
Sure.
kidding.
No,
Paragraph.
so a quick little explanation on a cover call. So let's just say you own 100 shares. You have to own 100 shares, and you have the ability to say, "Hey, man, I'd be willing to part with these shares at, let's just say, 10% or 15% above its current price, if at a certain date, if you give me a little bit of premium." So, give you a little bit more of an example. Let's just say you own ARKK, 100 shares of ARKK at $140. Premium on that, man, is really juicy. Like if you go a week or two out, you could easily get 2 to 3% of money in your pocket that day. As soon as you sell that contract, man, you get that day. But let's just say you have 100 shares. You could easily be like, I'll sell the 150 call for next week. So if it goes from 140 to 150 in a week, you're like, I'm cool with parting ways on it. And somebody might say pay you $2 to $3 to do that per share, right? So every contract is 100 shares. So you're getting a contract for $2, times that by 100, you're getting 200, $300 for that particular contract. And so basically, you're only really losing money if the shares go above $153 or $152. So you might be like, I'd be cool parting ways on that. A good example, one I just did, is I have 400 shares of Virgin Galactic. I'm truly bullish on the company, but with the recent volatility we've seen, options prices just started going through the roof, especially on both ends. For the options on the call side as well as the put side. And so they opened up 85 strike options on Virgin, and I was just like, $8 a share for March, like for $85 strike for Virgin Galactic. I was like, where can I sign up? You know what I mean? Like, I start losing money at $93. Like if it goes to $93, I'm fine with those things getting called away. I don't think right now the company is worth $93. I'd happy to be collecting my $8 a share today. So I have 400 shares. I collected $3,200. And you can just use that to collect income pretty regularly, especially if they
I
expire
mean,
worthless,
there's a
obviously.
bunch of different strategies around covered calls. I mean, you can wheel, you can try not to get your shares called away, or you can get like you don't care. Like to me in my dividend portfolio, I always, if I'm doing covered calls, which I don't even do them a lot on individual stocks anymore, but like I don't want to get it called away because it's going to make a
Yeah.
major taxable event for me because I'm up $14,000 or something in a
Yeah.
stock or whatever. So
But just like you said, like because you don't want to get capital gains tax on my Roth, I'm actually trying to employ a strategy where
perfect
I'll
example. Yeah.
buy 100 shares and I read it at the money. And so a good example is ARK. I bought it at 145, and for a week out, they gave me, forget what it was. It was like $4 or something like that for $1 or $146 strike. And then it went down to the mid 130s. A couple days later, I was able to buy back that call and then write a second one. And basically at the 145 strike again and get another $300. And so that one expires this week. I think it's a 147, 148, but I'm fine with it because I've made, even if they do get called away, I've made $700 in the matter of 2
No
weeks.
capital gains either.
No capital gain, so I'm perfectly fine with it. And that's something I'm starting to search to do in my Roth. I think what I've noticed is like if you find stocks at the right price and you buy them, they'll generally move, but then they'll somewhat plateau for a couple months before they start to kind of like oscillate again. And so what I'm really trying to do is just capture that income, that 1 to 2%, a week for some of those positions. And if they get called away, they get called away. If they don't, then I'll just continue to write covered calls on decent
I
stocks
think
that
the
have
wheel
decent
strategy is a great
volatility.
strategy for a retirement account. Absolutely.
It is, yeah, because there's no capital gains for sure.
I think Gerry pretty much answered this. Would you advise poor man's covered calls on Tesla? I would not touch Tesla with a poor man's covered call. So, and he pretty much just answered that. We're doing like, the Kimberly Clarks, the Cokes, the MOs, I got Johnson and Johnson, AT&T. That's what we're doing poor man's covered call on.
I know you're not doing it like at the like let's say 5% or so out of the money. You're kind of doing them almost at the break even, or are you actually getting a little bit
I'm
out of the money?
slightly above the break even.
Yeah. Okay.
Yeah. So that's 2 years in the leap, and then I'll look at it, I'll throw in the commissions in there too, and then all right, I'll try to go 50 cents above the break even or something like that, depending on what the stock is. But
yeah, it's the one I noticed on like TQQQ and RK, since they are more volatile. I feel like you could almost go a little bit further out of the money and still get a very good return, but then you also have that opportunity to get the good capital gains in there.
it just wouldn't touch for me. Like I'm just not going to touch an RK.
I don't blame you, man. I don't blame you.
It's just not. I don't even know if I would want to own 100 shares of RK, but I mean that's just me.
Yeah, I don't know.
Covered calls, I will leave you very poor. No, that's not true. I think he's just making a joke there, but that's not true at all. It's like almost the exact opposite. That's funny. Yeah, I mean, when you talked about Palantir and you talked about space and Virgin Galactic or whatever you want to call it, like those just every time I look at those stocks, I'm like, where I want to be on the stock pays nothing. I'm like, I want to be down here. And they just don't pay anything. I got to sell like 100 contracts or something just to make any money off of it. That's why I don't trade those stocks.
What are you trying to trade? Like the $5 contract on Palantir?
Well, I'm looking at SPCE or whatever. I want to be like down near the 30 or something like that. So
even the 30 still pays good money.
Okay, so PLTR. So the problem with Palantir, it's not been around long enough for me to just have enough information to make a decision on. And it's way overvalued,
I agree.
So I would want to be like 15 or below on that.
15 or below? Hot Dave.
Yeah, exactly.
Maybe I have too much connection with the organization, but I would say anything below 20 is a good price to pick up.
I feel like 20, it could just one day done there.
What, it could drop down to 20 a day?
I see your point. 20 is actually it's probably a little bit.
Are you looking on a chart, or are you looking from like a valuation standpoint?
It's slightly below a support, but it's not on a stock like that because there's just not enough history there. I don't know anything about the company. It's way overvalued. It's just not safe enough for me.
Yeah, it's only been since end of September, so it's still really new with the direct listing. I think it was a direct listing. Yeah, direct listing.
Yeah, it was.
So you're 100% right. I mean, I know a little bit of the underlying performance just based off the fact that I'm pretty connected in with the company and work with them pretty closely. But yeah, I still think right here, I would have expected this share price probably like 3 years down the road, and here we are, like not even 6 months into their listing, and here they are, kind of trading at a $60 billion valuation. I mean, that's pretty absurd. I think they'll be lucky to get $3.5 billion in revenue this year. So,
I don't know anything about the company. Space Virgin Galactic. I mean, I know you're literally like a part owner of the company or something. I don't know. To me, like I just don't see anything like that happening anytime soon. And even if there is space travel, like it's not going to hit the masses in our lifetime, probably. You know what I mean? Like I want to go up to space, $1,000 ticket, that's what, and that's first class, right? Like that's what I want, right? That's just probably not going to happen. It's going to be, $100,000 probably by the time I die or something. I don't know if that's worth it. Maybe it is. You can't take it.
How long until you think you die, Dave? I think it'll be cheaper than that.
Well, it'll probably be next week. I don't know. We'll see. So when it comes to SPCE, I'm looking at it again here, by the way. 25 is where I'd want to be on that. 25. Is that doable?
For puts?
Yeah, puts 25. Is there any money down there?
I'm sure there's some
Let me
dollar
look. I'm
bills.
actually in there. SPC. How far do I go out to get to that 25 level? Look at March 5th.
I'm sure you got some dollar bills.
Believe it or
It's
not,
still
it's actually not bad. It's
the
about
volatility
March
still
5th,
on. It's
so
pretty high.
26 days out. I can probably get about 30 to 35 cents out of contract. It's not bad. You'd probably just sell like five of those or something.
For the 25, you said?
Yeah, 25.
Dang. Man, if you just wrote those 2 weeks earlier, you'd be printing.
Well, I mean the days to expiration is longer. Why wouldn't I just go out further then, right? I can go out to March, middle of March.
Oh man.
I don't know. That's just not my game, I guess. That's just not.
It's not. I mean, there's a lot of activity on the put side, just based off the fact that I think that folks do think. I mean, the company does have history, right? 2014 almost got taken down because they actually had someone die. I mean, on some of the testing, and so it was paused for a little bit. So, there is some folks that there was a decent short interest, and that's I think why some of the pricing has kind of gone up is because folks did kind of sell out of their short interests. But I think it's also coupled with the fact that they're going to have a flight later this month, and then Branson's probably going to get in the air within the next couple of months. So we'll see.
27% short float. That definitely was a candidate to get hit. But I just feel like that stock is like that thing could just shoot down. One rocket blows up or freaking runs into the moon and knocks out of orbit or something. I don't know. Who knows? I just feel like 25 is where I'd feel safe on that, comfortable on it. That's my wheelhouse with a stock like that.
It could, yeah. I mean that, but who knows? On the upside, it could. Sometimes valuations on some of these kind of companies that are looking so far ahead, they can kind of get out of whack, right? I mean, sometimes the valuations just don't match the metrics like Tesla, right? And so that's why I was selling the 85 call. I was just like, you know what, man, I'm more than happy to let it go at 85.
But you already own it though. That's different. You wouldn't do a naked call at 85, would you?
I do have a couple.
You got Randy nuts? Jeez.
I'm trying to be like Randy, man. I'm trying to be like Randy.
Jeez.
But those are March 5th.
We'll make sure I overnight you I'll overnight you a chainsaw.
A different chair. Yeah.
Yeah. Well, he got rid of his, so maybe he already modified his. You can get. He returned it.
He returned it. What?
Yeah, he returned. He's gonna get a new one.
Oh man.
The hole wasn't big enough.
Yeah.
Oh man. Oh, that's funny. They did have a rocket blow up. Okay. I mean, were there people on it, or is it a manless one?
I think he's referring.
I'm just waiting for it to hit
2014.
like something, hit a satellite, which comes back in and freaking knocks the city out or something. I don't know. I'm waiting for something like that to happen.
Oh man. So what else are you looking for? So you got a lot of contracts on now.
Yeah, I have a boatload on right now. Yeah.
So when Monday hits, because I know you like to get a little more activity before you go into the weekends, get that theta decay. I mean, it's free money, right? Do you close out some that, let's just say you close out some that are in 20%, 30% in the money, or not in the money, sorry, 20 to 30% in profit, or you just kind of
No,
wait?
I didn't do anything like that. I'm running right now at 62% buying power usage with 36 open positions, 84 contracts total. So I was sitting at like 40 something percent, like high 40s, and then Friday roll around and I just started throwing on a bunch of stuff. I got an NVIDIA on that's not a strangle, so that took up quite a bit of buying power. I have a Tesla on that's not a strangle, so that took quite a bit of buying power. And then in the SPYs take up a boatload of buying power, so I got some of those on as well. But like I said, I had a bunch of positions I could have took off on Friday that were already sitting above 70% profit anyway. I'm like, you know what? I'll gamble. I'm just like, I'll gamble. I'm like, I'll just go through the weekend. By the time Monday rolls around, they should be, up in the 85% probably.
Yeah, I used to wait till 85, but now I've kind of lowered it to 50. Anything that's above 50. I mean, of course, that's not like a hard and fast rule, right? I mean, if it's 50% and it's like a day or two in, you got 2 weeks left, it just doesn't make sense to wait the other, let's just say 10, 11 days, right? But if you're at 50% and there's like 1 or 2 days left, it's like, well, another $100 for waiting for 2 days. I don't think it's likely that it's gonna, really swing to in the money. Let's just keep it. But there's also ones where, let's just say it is almost at the money. The cool thing is that I love about this is, like, let's say something that's pretty volatile, for instance, and you sell like a contract that's worth like $10. You have the opportunity, once it gets closer to expiration, it's all about that theta decay and whatever that intrinsic value of the contract is. So, I mean, towards the end of it, it's just like you could be in the money, but still profiting because of the fact that it's, the most it can move is $1 or $2 in a day, but you got paid $10 for the contract. So the contract might only be worth $2 to $3 intrinsic value at the moment. And then you're able to still pocket like 50-60% of the contract, even though you're technically in the money, right? Which that's part of the reason I like doing options is, you're selling extrinsic value most of the time at the moment when you're writing it. I mean, it's worth $0, right? There has to be a movement in the stock for it to actually be worth anything, and that's part of the advantage that I truly enjoy.
Yeah, this what are you selling that's got a $10 contract? Like Amazon?
I can't afford that. No, I'm not
Yeah,
making
yeah,
that
you can. I
rate.
do Amazons.
I was doing crap. What was like a $10? I did an Airbnb a couple Airbnbs when that first IPO'd. I was like kind of living a floor at about $100 or so. That was some pretty quick, easy money in a couple weeks. And what else was there? I mean, I don't think there was ever any $10 on Palantir. It's mostly a couple $100 contracts on Palantir that I'm getting after.
Like you're going like literally like 70% or something like that, right?
Palantir, only if my cost basis would have dipped into the 20s. So when it, like a couple weeks ago, when it dipped into the mid 20s again, I was selling contracts only if it was getting into the very low 20 or $19 range. But I think I was aiming towards like 24, 25 at that. I mean, I sold a crap ton of contracts when it first IPO'd at $10 puts. I was just like, hey man, like if it's $10 and like however many months from now, I'm be fine with getting put those shares. And then same with at the 15. Once it kind of raised up a little bit, I sold a bunch at the 15, and then it shot up to the mid 20s, and I was able to pocket on those. I made really good money on those. And then once it started getting up in terms of the actual like $30 range, I started selling covered calls. I would be fine letting probably them go at about 38 or so.
You're doing multiple different things then. I mean, I'm doing covered calls in the dividend portfolio against VYM, but that's like, it's literally like 60 days out. I don't even have to think about it. So my options account, I'm pretty much just, I'm looking at a bunch of base hits and even some walks in there, and maybe even getting hit by the ball sometimes, if that makes any sense. So
what would you consider getting hit by the ball though?
Yeah, I don't know. Yeah, I don't know.
Sometimes
intentionally getting hit here. Well, they intentionally walked me.
I thought a $200 naked call on GameStop would have been getting hit by the ball, but look what ended up.
No, that's a grand slam. But anyway, yeah, that's a no hitter. I don't know what that is, but yeah, I mean, so for me, I just want a bunch of base hits, right? And I pushed up to 50%, up to 70 now. So I'm looking at getting out of positions at 70%, and depending on, and I'll kind of answer this question here from Blake in a minute, but so 70% is my wheelhouse now, and I'll try have on about anywhere from $1,200 to $1,600 of premium every week, and it takes 70% of that. So that's just where I'm trying to aim. I'm up almost 10 grand this year already, and that was just me hitting it real hard to see what it took to get to that 3% a month, right? It was 3% last month. Because my goal was 2%. So if I can just dial it back a little bit, right? Like,
2% for
not
the
that I'm
month. I
going
thought you were
to.
looking to get like 4% for the year.
Well, that's off of cover calls, yeah.
Cover call. Oh, okay. So sorry, I
Yeah.
was getting that mixed
Well,
up.
I think originally when I was talking about, this is before I just started going heavy on it and increased the account size, but 4%, I probably had a video last year where I said, yeah, just 4% a year, I'm happy, whatever. And that was true. I did say that. Definitely have to cover calls, but when in the optioned account, right, what do you call it? The cash secured put side, I'll just call it that, the naked call side, whatever. The 4% was originally because I was taking it real serious. It wasn't, what was the deal? I was just doing them here and there. You know what I mean? Like it wasn't like a second job.
You were, and you were doing like, on the naked call side, you were doing like 3% probability. Like,
It was Boeing and Facebook and
yeah,
Microsoft, Apple, and all those. And it was just easy making money on it. Didn't have to really think about it until February hit, and then I made some videos on that too. But now it's like this is like literally a 9 to 5 job replacement because I'm on it every day. Almost all day. I might take a nap in between, but it's literally as much work as a 9 to 5.
it is.
Not as bad. I mean, it's not as much work. It's funner. It's almost like fake money, right? Like, oh, my net lick went up, $6,000 this month. I mean, it's unreal. It's a cheat code.
It is, man. The way I like to look at it, especially for CSPs, is you're selling insurance to hedge funds. Because I feel like that's most of the people that are buying puts are these hedge funds to make sure that they're able to kind of protect their downside and hedge against their downside. I don't know many folks that like normal institutional investors that are buying puts on normal companies like this. In rare situations, will I see people buying puts, but I feel like most people buy long calls or they'll sell long calls or they'll sell puts. But maybe that's just my interpretation.
Buying is tough. It's like I said, I mentioned in every single video, live stream, whatever. It's like you have three things right. All got to be right pretty much around the same time, right? I mean, the stock, the direction, and the timing. And that's almost impossible to get right. Why not put all that crap in your favor by being the person selling the premium? You're almost like literally my win percentage is like 98%. And those losers are just, it's the long leap side. Who cares? I'm up on the short side, right? So those losers are really fake anyway. It's like they're not really losers, right? So to
Yeah.
answer Blake's question here, do you always open contracts near the start of a market opening? Seems like the best fills and closing positions midday. You know what? It really doesn't matter to me. A lot of times you'll have, right when the market opens, you'll sometimes have inflated premiums. So you have to be careful of that. Definitely be careful of that, I guess. And the spreads might be a lot wider. A lot of the options might even not even have printed anything. So they might have like an ask, but the bid is not even it's showing zero or nothing there. So you have to be careful of that right when the market opens. But I'll pretty much, depending on, I'll try to close something sometimes right in the beginning of the day, right when the market opens. I'll try to close it because sometimes they're going to just drain the premium out of it anyway. So try to close it off. But no, I'm not
I'll
really.
generally, I don't know about you, Dave, but do you ever have limit orders on a lot of your options?
I always use limit orders, but do I have them sitting out there, you mean?
Yeah, sitting out there for
No,
not on when you're selling it, but when you're buying them back.
no,
Really? Okay. I
no.
generally,
I'm
if
impatient.
I generally will do it at about a 75% profit, in case it opens up. I've had a couple times where, actually, obviously a lot more than a couple times because I do it pretty regularly, where it'll show up 9:30 Eastern, and you'll sell it, and you're like, really? And then you look at your phone, and you're like, huh, I didn't think the price would have like jumped that much where it would have sold. So like you kind of said, I think before the liquidity kind of comes up during the day, you can get some pretty wild prices, but it also works against you as well. I've seen where folks, really moon the price early in the morning. So when you're buying back as well, I mean, you definitely don't want to do limit orders unless there's really high liquidity. Sometimes when it's like liquidity between the bid and ask is only a penny, I'm just like, screw it, market order. Like, I'm not going to play that game where I'm
I
fighting for a
rarely do
dollar.
that. Yeah, I rarely
Yeah,
do that. I mean, if worst case, you can just move up your instead of mid price, you can just go up to the ask, or you can go down the bid, whatever you need to do right then and there. But
yeah,
yeah, I don't use the market orders. I don't set the profit. I'm sitting on my computer all day. I work on the computer anyway, so it's just sitting there. Like there's no reason for me to set um, a limit out there or anything like that. I know Thumper does that, but I don't do it. How do you? Let me see. How much do you manage? How much? How much do you manage your positions all day, every day? I do just because I'm on the computer for work anyway. Um, I mean, but you could. There's strategies where you don't have to. We're just more active, right? I'm managing it. I'm taking stuff off. I'm putting stuff on, and that's something that's honestly been tough to do because I'll take it off and say, oh crap, I just took off 5 positions. I need to find something to put back on, right? Like I said, I got money sitting there that's not working for me, right? So that's an issue that I've run into a lot. Um, do you get that like itch? Like as soon as you say take a bunch of stuff off, you need to start putting some stuff on.
no, I mean, I think you hit the nail on the head, right? It's just like you could wait. Let's just say, so when you're selling, like we mostly do selling, and then in some extreme cases, we'll buy long calls. But well, I'll speak for myself. Sometimes, if I'm really bullish on like oil, for example, I was pretty bullish earlier this year, so I bought some long calls on Shell and Exxon and BP, and those are turning out pretty well. But I generally don't do long calls. I generally sell puts most of the time, and then I also do the naked calls, which everyone kind of knows about as well. But but I'm with you. I mean, you'll see, and Gerry's famous for this. Like you'll get 20%, 25% sometimes in a couple minutes. Like
Mm-hmm.
it's 15, 20 minutes, and it's just like, well, I mean, I just got 25% of the profit, that I could maximize getting. Why am I going to let it kind of wait the other 12 days or 14 days really to get that other 75%? Because most of the time I would feel like it kind of hits a plateau at 50%, right? And then you're kind of just
It
waiting for the
does.
theta decay.
Yeah.
So it's like if you're able to get that like juice, like 25, 30% within a couple minutes or an hour or two, it's almost just like, you know what, man, like you're getting a gift, take it, take that buying power, put it elsewhere, right? Of
And that
course, if you don't
happens.
have anywhere else,
Yeah,
what's
and
that?
that happens. And if you wanted to put that more in your favor, find a stock that's down. I mean, find a good stock, by the way, that's down, like had a bad earnings or something like that, right? And it's like you can get way down below that. But anytime like a stock had, it's down 2 or 3% pre-market, and maybe kind of look at the chart. I'm talking about a 1 minute chart at this point. Try to pick it up on the low, right? But you're going to be way down below that. So you're okay taking it to expiration, right? But because you bought it, you sold it literally while it's at the low of the day. You think it's the low, right? Then the stock goes back up. That's when you're going to be up real quick. And that's
Yep.
basically what Gerry's doing. Worst
Yeah.
comes to worst, he holds it to expiration, or he holds it a couple more days. The stock stays the same, or it goes down. He still prints either way, right?
I would say though, and we've kind of figured this out. So Dave, I'd like to hear I'll say it, and then I guess I'd like to hear your thoughts on it as well. But we'll see something down 10% after hours, let's say. And the next morning we're like, all right, well, we know what the action is tomorrow. Intel's a really good example of this over the past 2 or 3 quarters. And we'll
Right.
say, we're getting on this action, right? Intel prints money. Like, how can they be down 10% after hours? And then you'll end up with either a bunch of downgrades or something like that, where you'll think that going, let's just say 15% down yesterday's previous price on, let's just say an 80 delta or something like that, after it's already gone down 10% is safe, right? You're like, okay, there's no way it'll go down another 5-10%. And it ends up having more downgrades. And so what I
Right.
would just double check is just like, while it might be easy money, you can also sometimes get yourself stuck in that position. And the same happened with a lot of us on the opposite side with, obviously Stock Ninja with Roku, and then also we also did, what was it? It's not Palantir, Snowflake. So we,
Snowflake, Fastly.
yeah, yeah. So like we all kind of like wrote, an option on Snowflake, and then it kept getting upgrades. Luckily, we all kind of came out ahead on that one, but
I don't
um,
even touch those stocks really anymore. I don't touch Roku. I don't touch Snowflake. I don't touch Fastly. I just stay away from that junk.
Yeah.
But I mean,
So
let me just finish this question here. If you have a job, is it possible to just check it once a day? Yeah, absolutely. So you don't have to be as active as we are. And in addition to that, you could literally put on way safer stuff than what we're doing too. You can just do ETFs. You get safe. You know, you can check those once a week if you wanted to.
yeah.
So yeah, there's a lot of different things you could do. We're just more active. We're doing, a little bit more riskier stuff. I'm talking about like the Fastleys, the Brokus, and the Snowflakes. I don't even do that stuff anymore. So that's even more risky than like the Intels, the LMTs, the CRMs, and all
Yeah,
that.
I mean, Dave and I were talking about that. Was this last night, Dave? Where we were like, what if you do 10%, not in terms of probability in the money or probability of profit or anything like that, but 10% down off the current price on SPY a week. So you're like looking at a week, you're like, how often does SPY go down?
Yeah, exactly. It
And,
doesn't happen,
and you're
but
like, but you think about it, if you're able to kind of do that, 25, 30 times a year, because there's 52 trading weeks of the year, you could still come up with a decent amount of money and be very secure. So let's just say 3 p.m. Eastern time, you still can't get to your desk, man, because you're working. I mean, I feel like you'll feel pretty confident that you'll end up in, expiring
20, was it
worthless.
20+% a year, 24, or was it higher than that?
I forget what it was.
Yeah. It was still, even the PMCCs on like SPY, we came out with like an easy 24% a year. Easy.
Yeah.
Like 70% profit per percent or something like that. Like that's super easy. But just to answer Wyatt's question here, do you have to own 100 shares? For covered calls, you do. But I mean, in general, in my dividend account, I'm doing covered calls against VYM, right? I talk about that in the videos. I really didn't do a lot of videos on my options account. I don't own any stock in there at all. My goal is not to own any stock in there. Okay, so I'm not doing cover calls. I'm not even letting my puts get assigned. All right, so I'm making all this money and I'm not owning any stock at all. That's my goal, not to own any stock in that particular account.
Yeah.
You're a little bit different. You're doing a whole bunch of different things. So
yeah, I at my IB account, which is up to $5,000 now, so I'm all about it. But
that's
my
how
IB,
much?
it's up to $5,000, man.
All right.
Yeah, I'm trying to be like you, man. I got to get more money into it. But what was I putting money into? Oh, I was putting like my my sponsored money into it. So any movie videos that I did that were sponsored or like Christmas checks and stuff like that, I was just throwing it in there. So yeah, I got it up to 5K, and I'm making some trades in there now. But yeah, I lean more in that account towards the CSPs, just because I feel the thing that I like about CSPs is that you at least have a tangible amount of risk, which I've always kind of liked about CSPs. Whereas the naked calls, depending on the company, I mean, you can get screwed, right? I've gotten screwed.
Unlimited risk. That's why.
Yeah, it's unlimited risk, man. Like technically, it is very rare that, let's just say, something like a GameStop can happen, but it does. And it's not necessarily that it won't come back down, right? Because if I had the cojones to continue to hold it, but who knows when your brokerage will be like, enough is enough, and liquidate your account, right? Without you even knowing, right? It doesn't need to go to expiry for them to just be like, well, you're done, right? And so that is the problem with some of these naked calls. So I think that a naked calls, unless I'm going severely out of the money, and GameStop was a special circumstance. I've never really been screwed that hard on a company before.
But no lube.
yeah, but so most of the time I do okay with the naked calls. Like I'm generally doing 95%. Like Teslas, I'll do 95%.
Yeah.
Probability of profit. So we're talking, 20 or so % moves in the price within a week or so that you need to kind of hit in order for that to kind of have to come to fruition. So generally speaking, feel pretty comfortable about that. But
I'm putting on about 3-to-1 puts to calls, and and lately I've kind of dialed the calls back because I just feel for some reason like the bias is to the upside, right? So it's like there's less risk for the puts. So I just feel comfortable on the put side. And then most of the calls I've been putting on lately are just strangles. That's the only reason I'm putting it on is for the buy-in power.
I truly love the strangles, man. I really do.
Yeah.
And one of the things that I also am starting to recognize is like sometimes I'll just find a really good one and I'm just like, you know what, man, I'm gonna put in more contracts than I should. And I do. And that's not smart, man. Like I need to be more cognizant of just like we were talking about this a bunch of times over the past couple of weeks, but it's like just like a dividend portfolio or a normal stock portfolio, diversify what you're writing options on. Right? Like don't use more than 5 or 10% of your buying power.
You got to be
one particular
strategic,
position.
right? Like what stock am I trading? How many contracts do I need to put on? I even get down to this point now where this is a good example. I had a PayPal and a Square on the same week expiration and all that. I'm like, all right, that's the last time I ever do that because they both got affected the same day. Like they were both down 5% the same day. All right, never going to do that again. So you just learn these little things. You make these little rules in your head. We all have them, right? Like, okay, I'm not going to do this. I'm going to do 70%. Well, that's another rule I added. Okay, I'm not going to do the same type of stock in the same expiration week, because they both hurt me that same darn week,
Yeah, I mean, it's almost like a no-brainer, right? Like, why would you do 10 contracts on Intel? Like at one point, I had 20 contracts on it. Yeah, at one point, I had 20 contracts on freaking Intel. Or was
Intel's actually an okay one to do it on, especially if you get down like near their 52-week low, right? I have Intels I think on right now, and I did quite a few. I don't have 10 on, but I just don't feel like Intel's going north, and they're not going to get back down below that 50 point, in my opinion, unless the market goes down. But
I mean, at that point, I was on the hook to potentially buy 90 grand worth of Intel. You know what I mean? It's just like, am I comfortable with that? I mean, you have to think about that. It's just like it doesn't use that much margin, or buying power in the background. But you think about it, it's like if push comes to shove, you're going to be sitting on 90 grand worth of Intel. And I don't know how comfortable I really felt about that. And, you could say that about a bunch of the stuff that you're kind of working.
Let me answer Christian's. So does expired worthless on a covered call contract mean you keep the shares in the premium? Yes, it does. You don't have to let them expire, though. You can close it out early by buying it back if you want to, and just lock that premium in right then and there, and then start the whole process over again. You don't have to wait till it expires. I just let mine on the covered call side, like against the VYM. I let those expire because I'm doing like 14 contracts. It's quite a bit of money for commissions. So if you don't want to pay the commissions, you can just let it expire. But there is a little bit of risk to letting it expire. For some reason, after hours, it went in the money. You could get jacked on that, but that's so rare.
Yeah, so I think one of the things I didn't recognize until we had discussed it a lot more is you can't trade options after 4 p.m. Eastern on Fridays, right? But it's based off of what the share closes at what, 7 p.m. or 7:30 p.m.
Like an hour and a half after, yeah.
Yeah, so a lot of things like Elon loves to release things at like 4:30 p.m. Eastern on Fridays, right? And so if you have a Tesla that expired slightly out of the money, it might just be worth buying some of those meme stops back that can move 5-10% after hours, even if it costs you $2, right? And most of the time I will do that. Like if I know that it's going to expire worthless, but it's close, like it's 1 or 2% close, I generally just pay the $1 or $2 to buy it back.
Yeah, I think it's worth it, especially on a stock that could move after hours. Typically on Fridays, like nothing moves. People like put their crap away. They're not gonna trade anymore. But on like a Tesla, forget it. Close that some bitch out. Yeah, so Tam here, have you ever done iron condors? I don't screw around with iron condors. I just do a strangle. I get why people would do an iron condor because they probably have less buying power or a smaller account. It's just too much to manage. You're doing 2 spreads, 2 separate sides, and it's just getting fills and all that. Like none of us really do it, but really none of us. I don't mean All Good has a smaller account, but she's not doing iron condors. She's
All
not doing.
Good says she has it, but All Good's definitely part of the 2 Comma Club. I don't know what the hell is anybody saying.
What's wrong with iron condors? It's just too much work. and you're cutting down the premium. But like I said, I mean, we're not working with smaller accounts either, so we don't really have to do them. You're defining your risk there. I mean, I get it. It's just not something I do. I'm not like knocking them either or anything like that. It's just not something I do. I want to get wider than what the Iron Condor is. So I'm even safer with the Iron Condor, and I'm making more money than you would be making with an Iron Condor. So that's just where I sit on that.
All Good's lying. She's got 2 commas.
What's that?
I said All Good's lying. She's got 2 commas.
Yeah, probably. If you aren't doing this in a tax shelter account, do you get? Yeah, you get a 1099. It's like counts as short-term capital gains. It looks like Gerry entered that. So, Alex, you had a question here. Where did it go? Did you delete it? I saw it. Oh, there it is. Sorry. Hey, Dave. You having a good video? What are a few of the main tickers responsible? That's a good question. Let's see here. Well, you want to go through yours while I pull mine up?
No, I've only hemorrhaged cash this year. No, I've actually had a lot of good trades, but it all is kind of just blinded by one big loss. So Lockheed has been a good one. Baba's been a good one with some CSPs and some covered calls on that one as well. What else? I mean, I've closed out a lot of the leap short puts that I've had on a lot of positions. You know, they were outwritten for Jan 22 or Jan 23, and I, kind of closed those out just because they were up 30, 40%. I'm like, well, I'm not going to wait another year or 2 years to realize the other 60, 70% of some of those. So I closed a lot of those out to try to free up some of the buying power. I really like the 1 to 2 week range. So yeah, I think I'm gonna stop doing the leap short puts that I was doing.
Well, this thing's being stupid. It lets me pick 2 windows that I have, but I have like 5 open. It won't let me pick the one I want to pick. That's funny because earlier it would actually let me pick the one I was trying to pick, but now it wouldn't. I mean, anyways. So the most tickers, let's see, for the QQQ, Amazon, Netflix, SPY, Zoom. That's like the top 5 that I've done so far this year. So I've done
TQQQ is the one for me. Apple, I did some at the money covered calls. That did relatively well. That was a couple $100. My ARC, did I do ARC G before? Who was it? TQQQ I did well as well. Did like almost an at the money for that one. So I got like $400, $500 for that in a week. Those were in the Roth. So those have done well. If I can net $300, $400 in a week, man, on a $10,000 position, I'm super happy with that. That's 3-4% in a week and a half.
SPY and QQQ, I'll tell you, those are one of my go-tos. Like I have those on every week. So, and I've been even sometimes like when it gets to close to that Friday or whatever, I'll put like double on. So I'll have one on this week and then I'll have one on the next week. So I'll kind of like spread those out, and because they do take a lot of buying power up, those darn things. But I'll tell you, they're just less risky and they pay pretty darn good. So
yeah, at that point you're just worrying about the theta decay, not really the large movements. I mean, generally speaking, if you can get you're probably playing like 5% away from the normal strike, right? Or not normal strike, the normal price. So your strike is 5% away from the current share price, probably.
So for QQQ, I did a 10% probably in the money on QQQ. Excuse me, sorry, actually that was cost. QQQ is 6.5% probably in the money. I'm down at the 280. And that's 30 days on that. So, and I probably won't even take it probably past 15 days, most likely. SPY, I do have SPYs on right now. Those are 6.5% probably in the money. I'm at the 335 for 30 days out.
That's a 15% movement.
Yeah. Well, I have that in there too. Yeah, you're right. About 13%.
I'm not good with math. You know that.
But I mean, the thing is, the ETFs, I mean, the market in general can go down 13% in a month easy. You know what I mean? It's 20 trading days, but I'm mostly concerned. It's just unlikely, right? It's like the probability of that happening, like especially 10% in 1 week. That's so unlikely.
But
What?
also, if it did, wouldn't you be happy to potentially let those get put to you?
Maybe I'll find out when it happens.
Yeah, I mean, part of me thinks about just like almost doing one on TQQQ 50%, because you can actually make some pretty good money if you're doing a 50% down TQQQ, or like what was it, 30% down. I remember when TQQQ was up around 100, I was selling $70 strike puts, and I was still making pretty good money on that. And that's a 30% movement. So within a week, you'll need a 10% movement in the Qs for that to kind of come
I
to
really liked
fruition.
your strategy. I could see myself using your strategy for sure. Being the QQQQs, we go down 30+%, take that, dump it into TQQQ. There you go. Yeah, we could go down more, but I think Alex would approve of that. So
Yeah, so for those of the people that may not have the context on that, so I was in TQQQ 2-3 weeks ago. I switched from QQQ to TQQQ. It went up, about the Qs had probably gone up 5-6% or so. I was up about 14% on the position, and I said, you know what? I like volatility. I can handle the volatility. But what I thought about was really I'm in the TQQQs for extremely bullish situations. I'm not bearish by any means. I'm
right.
always going to be investing long term. But what I think TQQQ will best be held by is, since it is triple leveraged, March 2020, for example, the majority of the market pulled back about 30%. And so I think TQQQ pulled back about 75%. Not 90% like you probably would expect, but 75%, because also when it goes up a little bit, it also goes up 3 times as much. So, and some of those dead cat bounces on the way, from late February to early March, you're able to take back some of that, those gains from. So it's obviously not just 90%. But my thought is I don't like to time the market. I'm just like always a net buyer of stocks. And so the Qs are something that I always just want to have passively in the portfolio. But if there is a pullback, it's going to hit the TQQQ ETF very hard, like it did back in March.
Sure.
And if you look at the Qs in March versus TQQQ in March, the return has been substantially more in TQQQ. So my thought is I'll keep my money in the Qs until I see a, let's say, 20 or 30% pullback, and then just switch it at that point. Because at that point, TQQQ has already taken a huge chunk of, the beating that it would. And yeah, it could still continue to go down 10 or 15% or so, but you've basically got it into a triple leveraged ETF. I mean, I forget what TQQQ it got to. Was it
minus 60 some? I thought.
Yeah, it was something absurd before it
It
split.
wasn't near 80, so it wasn't technically double. I think it was only 60 something. Only. Yeah.
So I think it, since they split it, did it go down to $15 a share or something in March 2020, and now it's up to 100 and 105, right?
But we
So
also
it's
thought
almost
about
6
something else too, right? We'd probably both buy leaps as well on various things.
Yeah. So I don't think semiconductors are going away. Randy special is SOXL, which is semiconductors bullish.
Yeah,
Triple X.
X.
And semiconductors in this world that we're living in, man, aren't going away. It's only going to continue to be advantageous to be in semiconductors, because more and more things are going to need semiconductors going forward. So I think that one's a good one to potentially get in, and the Qs. So if we do, I would probably buy a couple $1,000 worth of leap calls. I don't know what I would buy it at. If I would buy it at the money, or
Right.
slightly out of the money,
or 2 years or 1 year.
Yeah, 2 years, 1 year. It's just like, I don't know.
The thing is,
like part of me is tough.
like SPY or something like that. I mean, it ain't going to be cheap, but I'll tell you, I mean, it would be a sure bet most likely. I mean, if it's not a sure bet, then we got bigger. Brass is going to matter then, not freaking money. But I mean, it's just the way I think it. Sahib here, do you ever put a closing order in advance with set profit margin? I don't do that. You could, but I'm sitting in front of my computer all day anyway. I just don't mess around with that. Thumper does. Do you ever put any, profit takers in, Matt?
Yep. Yeah, most of the time I'll put in 50 to 75%.
Okay, that's just because you're not sitting at your computer all day.
Yeah, when I was like looking at it, I mean, when I was mostly working on the stock exchange stuff, they never really fully loaded me up on my old team because I was transferring back from Trinidad, and you know, I didn't. I think it was kind of just in a, um, how do I say it? A, a place, not a placeholder is not the right word. Yeah, I guess a placeholder until I got figured out where we were going to move into the new organization and my new job. And now my new job has kind of ramped up a good bit. So been a lot less active in the trading space. So I do like to keep the 75% profit. The only problem I see with that though, and Dave, I don't know if you've ever run to this, but sometimes when I do have that 75% profit take on the table, I'll forget that it's on. And so then I'll go to like try to close out a trade, and then it'll be like, this
You
position's
can't
not in
put two
here.
You can't. Yeah. You're trying
Yeah,
to
and
sell a stock that you're already trying to sell,
I'm just like, what
or
the
buy
hell?
it,
I'm
or
like,
whatever the hell you're trying to do.
and
I
so
think
every
Gerry
once in a
got one of
while,
those.
yeah, every once in a while, I'll be like, the hell, I can't even sell my own positions. Fidelity's garbage. Like, what the hell? And then I'm like, I already have
Yeah,
a,
Gerry had one of those the
yeah.
other day. I was like, "What? You got to read it." This question is too hard to answer because unless you had a game stock happen to you, like to me, it's like I got so many positions that I'm like 95% profit in. You know what I mean? Like I had none. I had no so far this year. I've had zero that were even in the money or even close. So I don't have any GameStop answers for this particular one where I got screwed with no lube.
I would say my best ones have been Palantir for CSPs. I remember you gave me crap about a lot of those when I was putting on the Leap short puts on Palantir, but
Now, I was only giving
um,
you crap because you're saying it was realized when it's not realized.
well, I don't say it's realized. I just count the
You're
premium,
like,
right?
I made a video on this. I just made 5 grand on this. I'm like, that's not realized for another year,
Not
unless
realized
you
for
want
another year.
to.
But yeah, but yeah, when I had to buy back stuff, I count that, right? So it's not. But anyway, um, for Palantir, that was like eight. Was it $8,000? Am I? No, it wasn't eight. No, I had a $3,500 one that I wrote. I think it was for 5 contracts or something like that. And then I had a 10 contract one, which I got like 5,000 or 5,500 for. And I think I closed those at like 50% profit, just based off the fact that, you know, Palantir has obviously gone up to the 30s at that point. And so I think that was probably my best single trade. But of course, I've made some pretty good ones, you know, months where I've made, you know, decent amount. But I've bought back some of those leap short call or short put, sorry. So, um, yeah, just because I wanted to get into the shorter expiration date ones. I like those, and generally speaking, they go, but the time decay goes, the theta decay goes in the opposite direction, right? You know, you could
Mm,
have something move, like let's just say my Virgin Galactic. I have $30 puts for Jan 23, and those are only like 25% of the money. The stock is literally 100% above that at the moment. So, um, you know, you have so much decay. If it were to stay there, I mean, of course, over time you'd be able to, but it's just like because you have so much time, the the cloud of probability that it could potentially go back down to $30 is huge, and so yeah, you're paying for a lot of theta decay at that point, but you're also getting a lot of money. But you kind of have to think about it. It's like you either try to get these little singles that Dave is talking about and try to just knock away at it 1% here, 1% here, 1% here, 1% here. Or you could look at these leaps and be like, well, I could tie up, let's just say, 20 grand for a year, um, and get a guaranteed 30% return. Or I could do 2 years and get a guaranteed 50% return. Um, but what we've recognized is if you kind of do the singles, you can kind of compound a little bit faster, and also, you know,
oh yeah,
you're a little bit
returns will
more
be
active.
better,
Yeah,
and so much can happen in a year.
can.
So much. What if it goes in the money like literally 30 days and you got freaking 365 days on? And then what are you going to do? Like, oh, I'm going to buy it back and take a loss. Like, you know what I mean? It's just so much can happen in that amount of time.
Yeah. Which is
Um,
why I don't understand why people like to go 30 to 45 days out unless they try to trade a lot less. Like unless they're like live an
Yeah.
active
I'm gonna
lifestyle,
get
and
there. I'll probably do it. I'll do it on spies and Qs, but like on individual stocks, I probably won't do it unless it was like, you know, an aristocrat or king or something. Maybe I would do it, but
I'm curious.
it depends. Like if you want to hike the AT, like I want to, right? Like you want. I'm gonna be making some premium while I'm hiking the AT. I'm not, you know what I mean? Like I'm not gonna go out there with no premium on, you know.
Yeah, well, you're gonna be doing the bot, right? Or do you not want to mention that?
I think two other people answered that question, so I'm not going to answer it. Sorry, yeah, I think Gerry answered it. So
Okay.
Ultra doesn't, sorry, Damien. I already moved it back an hour, so I thought it was like a basketball game where it's like 2 hour, 2.5 hours at the most, you know, and with no OT, you know, and like freaking football games are 4.5 hours and crap. Like, what the hell's going on here? Sorry.
Because
You
they got
can
to sell
watch.
that ad space, man.
Yeah, you can, yeah, the ad space. You can just go back and watch the replay for the beginning. It's me fooling around with a stupid camera or whatever.
Oh man, I'm just trying to see how much money you can make monthly selling. Ugh.
That's all over the place.
I was just looking at if you were to sell 20% out of the money on SPY puts monthlies, how much you could make, which ends up being about a 95% chance of profitability. But let's just say you're selling the 310 for mid-March, the March 19th expiry. If you were to annualize it, you'd be getting about 2.5%. And I'm just like, shit, I feel like there's so many other things. Like, I don't know if I could do that, man. Like, only selling monthlies on SPY. I don't know. Maybe I would sell it at the 15%.
Like VYM, yeah, it's very tough to get above like 1.5%, something like that.
330s.
It's not a lot, but the PMCC is what we were talking about last night. Like that was, I can replace my whole dividend portfolio with that, you know, 24% with ease. And that's
Yeah.
like 7x the dividends that I make on that darn thing. You know what I mean? That is a
So even if you're selling 15% out of the money for SPY monthlies, you're still getting 4.5% a year, which isn't bad. But you could obviously do 4% in a month as well, but it's a lot more risky and a lot more trading too. So
more work, yeah. Oh, I'm right now sitting at what 3% a month, and I'm not risky at all. You
yeah,
know, I mean,
you're conservative.
Randy came. I think he's up 50 grand this year already. Is what he said. He is high up on freaking morphine and other crap. Last night. It was hilarious, but he just missed the 50 grand in 1 month, so he just missed it by a couple of days. But he's way. I mean, he's just. Yeah, he's got a nut sack. What's your DTE, boys? So mine's interesting. My average DTE is 33 days, but I have to tell you, that's skewed by a bunch of PMCCs right now that are out 700 days. So it's normally a lot lower than that. Average days held, because that's actually the ones I close, are 6 days. So my average day that I hold is only 6 days. But I mean, the PMCC's kind of screwed up the metric a little bit. I need to figure out how to probably take those out.
Join Hot Randy's Discord. That's all I know.
Yeah, put it in. Yeah, it's free. You don't got to pay for it.
You don't have to pay for it, and you don't get yelled at for writing in the wrong channels.
Yeah. What's this one here? This one's for you.
Yeah, sure. I can address this. So I did write naked calls on GameStop, and I lost a good chunk of change. And I actually would have been profitable on the trades. I've been able to hold them. But, some folks might have some experience with this, and I don't want to call anybody out. But if you go too far negative, you either have to add too far negative in your options. You'll either have to add money to the account, or Fidelity or other people will potentially liquidate your account to make sure and close out the trade early, just because it's going so bad against you. You don't have the collateral on your account to kind of keep the trade open, if that makes any sense. So they're just trying to make sure that they don't lose money on their behalf either. So when I wrote $200 naked calls on GameStop, and then obviously went to to 350, 400 that night. And so when I woke up the next morning, I just closed it out. And so I was down about 50K. I haven't looked at it exactly, but I know my account showed about $50,000 less. I don't know to the cent. And I'm afraid I just like want to put it behind me. It's, you know, it could have been a lot worse. So I just don't want to even think about it. I'm just going to take a couple months off from like just strictly focusing on how much profit and just get back into a good groove of things. You know, being a lot less risky with what I was trading on options. I had a really good track record, you know, before all that. And I'm trying to think if it really was this kind of a wrong place, wrong time. And I did just gamble and, you know, it hurt me, obviously. But there had been, I would say that there was some foreshadowing where I was getting more and more risky with some of my naked call positions and stuff like that, where, you know, I've come out doing okay and I think I got a big head. And what I needed to do was just say, hey, man, you have a winning strategy selling decently safe cash secured put, well, not cash secured puts, but naked puts and naked calls on decent companies. But sometimes I would do them on some meme stocks to make a little bit of money, and generally speaking, I would come out okay. But yeah, that one was stupid, right? Just to get involved in a short squeeze at all. Who knows what the price could end up being? There's no valuations or no sort of rhyme or rhythm as to what can happen, and so I left myself vulnerable to unlimited risk, and of course, it bit me. So just recognize that, you know, naked calls can go haywire and, you know, things can upgrade, you know, Roku can upgrade, Snowflake can upgrade. So they have a good quarter and they're up, let's say 15%. You're like, well, it could be a good opportunity, 15% up, you know, get me a naked call in there. Next thing you know, a bunch of people start upgrading, you know, a couple days thereafter, and, you know, it goes up another 10%. Now it doesn't necessarily look so good. And so, for me, I had a good strategy that, you know, was adding a couple percent to my portfolio every month. And, you know, I would have to roll sometimes here, roll sometimes there, but never really was I getting myself in a bad situation selling some of these options. And GameStop was just one of them where I just like it was a legit gamble. You know, I was just like, I'll sell a couple contracts, make $6,000. And next thing you know, and a couple people were in the like I think Randy was in it with me, and he took a minor loss, and he just kind of was just like, oh, I'm out, right? Like, but it went to 140 that night, and I was just like, it'll open up lower the next day, right? And nope, right? So, and my fear was just I just didn't want Fidelity to just liquidate the account or anything like that, and I was just like, you know what, man, like it's just not worth it. Let me take the loss. Let me take it and learn my lesson. And so I think for the next couple months, I'm just going to try to slowly just get back into selling rather secure positions, stay away from things like that, stick to my companies that I wouldn't mind owning. Like that's what I was doing on before. I was doing it on Palantir. I was doing it on Virgin Galactic. I don't do it on things like, well, I guess the first one I really did sell contracts on that I didn't ever really want to own or be involved in was Snowflake. And that ended up being a bad one too, because it started getting hit with upgrades. And luckily it came out with that one positive. But I think that there was just a couple situations where I started doing it on doing options on companies I didn't want anything to do with more and more. And what I just needed to do and stick with is, you know, companies that I have really good track record with. If I got stuck with like 500 shares of more Palantir at a price that I didn't mind owning it at, you know, I can't be pissed, right? It's a company I probably would have bought more anyway.
I mean, you could take it one step further and just say, you know, trade what you know, right? I mean, because I don't really know shit about Fastly. I don't know shit about Palantir. I don't know shit about Snowflake. I know a little bit about Snowflake. I watched the JMac video, but like literally, why we trade those stocks, right? The JPS syndrome, right? That's that juicy premium. You can find premium at other places. It doesn't need to be in that junk. You know what I mean? So
and I think it's that get rich quick thought, right? Where you're like, I felt like for me, and I don't know if I very early on, I was just like, you know, found the cheat code, man. Like I'm literally with what we're doing, it's definitely like a millionaire sort of strategy, right? It just takes time. And I just got impatient, I think. And I was just like, here's
I
$6,000 sitting
can't.
on the
Yeah, I need to
table.
get rich faster.
Yeah. It's like, God forbid, I'm making 3% a month or something like that. I need to make it, all in a
Yeah. I
day
need
or
to make
something like
3% a
that.
day. Damn it!
Yeah. Yeah. So, I mean, it set me back, right? And so I just would caution people. It's
It
like,
humbled you because you never
it
been
definitely
through
did.
anything like that before.
No, no. And, it's a good lesson because it could have been a lot worse had I not, let's just say I got a couple more years under my belt and was at 1.5 million or something like that. And it added a few things to my list that I have up here on my whiteboard. So,
Rules.
yeah, I wish that I could set rules in Fidelity where it's just like, are you sure? And you have to click
Yeah, I
like,
know.
yes. Are you
Yes, you got to
sure?
put in
Like,
like a cipher code or something.
yeah,
Jeez,
I wish I could do that, man. I should pay you. You could probably write that, can't you?
I probably could. Which of your videos should I start with leaps? So that's an interesting question because when we're talking about leaps here, other than PMCCs, we're talking about actually buying leaps when the stock market's down 30 or 40%. It's probably that's just gonna be a strategy I'm probably going to use. I'm going to buy some leaps on companies that got torched bad, right? Because it's most likely always going to print. Like I own leaps on CCL right now, but as far as like selling premium, I wouldn't go out that far. There's no reason you should be going out to a leap to sell premium.
Yeah, I
Um,
can't ever see myself doing that.
so that's a tough question because I don't know what point you're coming from. You're talking about buying premium, or you're talking about selling it. Yeah, I got burned on Beyond Meat the same way. Yeah, that's that's another thumper special there.
Dude, I like Beyond Meat though. I have a 20 share position,
Yeah,
and
100% processed. Um,
it does. How do I say it? I've tried it though, and I believe in what they're doing, and I understand where they're coming from because it's like 80 or 90% of the crops that are grown in the world are to feed the livestock in which we eat, right? So I mean that's a lot of crops that you can kind of get rid of, but at the same time, it's just like until it tastes exactly like what I want, like
well, I
I'm a
mean, they gotta
huge
paint the
sucker.
stripes on there and everything, to make it look like it's grilled and stuff. So
Yeah,
spray painted on. Yeah, I
I'm a
mean,
huge sucker for the char on a burger.
yeah, they spray painted on there.
And no, I never. Mine's
You ever
just
seen
like a
Super
normal
Size Me
burger.
2?
No, mine don't really look like that. But like when you grill a burger and you have that char on the outside, the black part of it, and like I love that on like a real burger.
That's a
Like it's
carcinogen, by the way.
what the char.
Yeah.
Well, it is what it is. But yeah, like on that plant-based meat burger, man, it just doesn't taste the same.
It's the problem with the plant-based thing for me is it's like literally 100% processed. There's nothing in there that's whole. It's like the whole thing is like just
Science.
mashed together, and then form into a patty, and then there you go. I mean, the problem that I have with it is I think it's just because it's coming from the wrong place. It's coming from an animals lovers place, right? Like, I mean, if animals weren't meant to be killed, then why are they so hard to freaking kill or hunt? You know what I mean? Like, they're not. It's not easy to kill animals out in the wild. It's very tough to do, and that doesn't mean like I'm anti. I mean, it's just I want something whole in my body. I think that's what my issue is. Yeah,
Just good bacon.
yeah, bacon. It's farm raised. But as far as there's no stock that I wouldn't trade because I don't believe in like cigarettes. It kills a bunch of people, but I'm still going to trade Altria. You know what I mean? Because every stock can be a sin stock. You know what I mean? Like every stock can be a sin stock. Doesn't matter what I mean. Like Facebook. Facebook is a sin stock. You know what I mean? So that's just how I look at it. So there's no stock that I wouldn't probably trade.
So your portfolio, just I guess somebody asked how much time we're dedicating to our dividends versus our options trading. Your dividend portfolio is still the fundamental basis of what you're trying to get to, right? And the options trading is just kind of that cherry on top, that extra
Coma
income.
money, man. I gotta have that coma money out
I'm
there.
with you, man. I'm
It's
150%
just
with you.
I want to get to that $2,000 a month where I can kind of like not quite live off of it, unless I go live in some not third world country. I guess I could live in like Costa Rica. That's not third world, but
We going to Costa Rica, Dave? I'll go tonight.
Thailand. I mean, you can go in another place and live on $2,000 a month and probably still live like a king, right? And the dividend will pay for that. And then anything else, so I want to live like a super king or something like that, then I can just trade options, which I'm going to always probably do anyway, because it's fun and it's literally a cheat code. Every day you see your net lit go up and it's like, is this real money? Is this real money? It's real damn money.
It's weird. It's truly weird. Are you going to sell all your stocks and do PMCCs?
No comment. I plead the fifth. And everybody here, it's so tempting to do that. You know what I mean? 24%. And that's like easy. 24%, right? And I'm making what, $13,000 in dividends right now a year on 400K, right? A little bit more than 400K. I can make 24% a year on 400K.
What were we looking at, Dave? I forget. It was AT&T, and I did the calculation. I said I could get like 14 contracts or something like that. And I forget what it was. It was like 8.
We had like 20 contracts or something, or 30 contracts was like $2,000 a month.
Yeah, so I think with my position in AT&T, it was like 400 or so shares. It was $12,000, $13,000, and with that, I could buy, depending on what strike, the $20 or $23 strike, I could buy 14 or 20 contracts or something like that. And with that, every 2 weeks, I could make like, I forget what it was. It was like $800 or something like that. So, do that a couple times a year, and I think I'm only making $800 from my AT&T shares a year in dividends anyway. So
yeah. So basically you can 7x whatever your dividends are. I mean, just times it by 7. That's what you make off of PMCCs in an easy case, right? Because you could actually probably even pound it out harder if you wanted to, right? With weeklies and stuff like that. And I mean, I think we even dropped it back down to 70% or something like that. It was still like 20%, right?
Yeah, so DW just kind of put it in the chat box.
Well, it's AT&T. So $27,000, you can generate $2,000 a month. I mean, we're not talking about doing 400K in AT&T. We're talking about you could probably do SPY. SPY would be a good one, right? But I could replace a lot of the stocks in my dividend portfolio with PMCCs, like the Microsofts, the Apples, and all that stuff. But honestly, like there's more risk with that, right? But anyway,
there's more risk. You're risking something that's going to be the same value, if not more, in 2 years.
Right. Yeah, 2 years to at least break even on it at minimum, where you don't lose a darn thing, but you literally wipe out the complete leap cost. But think about it though. So you just do this for 2 years, right? What's 24% of 400K is a lot of freaking money. You know what I mean? Like. You just do that 2 years, and then you start like, okay, I got way too freaking much money. I need to start building a dividend portfolio again because I need that coma money, right? So I'm starting to fart dust, and it's time to get into that coma money.
Well, that's what I do, man. I just, about half whatever I make, once I see that my cash in my account gets to a certain amount, I just throw it into some dividend-paying stocks, and that's just what I do every time my options income, and the cash in the account, I'll buy like a Johnson & Johnson or a Pepsi. So yeah, I don't know.
Not sure what he's meaning here. PMC is hard on divvy stocks. No, I don't think it is. I almost think it's perfect. I'm doing it on, I got one on, I don't have any on Altria right now.
So you have some on Pfizer
Coke,
too, right?
Pfizer, Johnson & Johnson, AT&T, and KMB. Piece of cake. Like we're getting like 2% a week. I mean, it's so I don't know.
I can't do PMCCs in my Roth, so I'm just buying 100 shares and selling them at the money covered calls, and even that, I mean, it's not the poor man covered call, it's just normal covered calls, but I mean, it's the same concept. I mean, you're just trying to get as much equity in a company as you can. In the case where you're doing a PMCC, you're trying to just use it with deep in the money calls, long calls, leaps.
Do you
actually.
want to
And
keep the stock or for the dividend? No, you don't care about the dividend at that point. That's the whole point, right? I mean, I'm getting $13,000 off of $400,000, right? That's all I'm making is $13K, right? And with PMCCs, I can 7x that easily, right? And not even literally. I mean, you could just do monthlies, even make it easier if you wanted to, right?
yeah, the
So
only downside is if the positions pull back, then you can't really. You could still sell covered
there is a
calls,
slight
but you
issue
might
with
be.
that, but I mean, the thing is the market's it's biased towards the upside. We're not gonna, even if we have a 10% or a 20% decline, it's most likely not gonna stay down there. And I even think we were talking about doing like 3-year leaps, right? Like you have 3 years to make that back, right?
Yeah, SPY sells December 2023s now, so I
Yeah.
don't know when other stocks will start coming out with December 2023s, but SPY has them out to that point already.
So just the chances of not making $13,000 a year is like absurd. I mean, it's just not going to happen. Even if the stocks continue to go down, like you said, I mean, like I said, you have like 3 years on the leaps anyway. So you could just spend a whole year, even if it was just to break even the whole year, nothing, whatever, just to stay below your break even or above it or whatever you want to call it. Like literally, you still have 2 more years.
Hot day.
It's hard to explain, but it's really honestly, if you have, some time, you're not worried about being in a coma in the next couple of years or whatever. I'll tell you, it's a very compelling way to go.
Yeah, especially if you're trying to grow it, right? It's just like you're not. I have this argument with a lot of folks all the time because I still have the dividend portfolio, which is the foundational piece of what I'm trying to strive for, that 4,000 to 5,000 a month in dividend income. People because I talk about options because it's it takes up so much more time to do this option strategy, but the returns are potentially a lot greater than what I'm kind of seeing on the dividend side. And the dividend side, it's like you kind of just put your money in it, you talk about what you have your money in, and then it's kind of done, right? I mean, you don't really have to talk about it anymore. It's just like you just wait quarterly for it to show up. But I feel like so many folks are just so much into just getting in dividends early, right? And I did it for my purposes, but that's why I like to explain to people. It's like I work in a very volatile industry, right? Like most people, they might work for the government or they might be a teacher or something like that, and they might have a much longer potential time horizon to be working with, where they could, probably have pretty good job security for the next 30 years. I've seen the amount of people that I started working with in 2013, I think is down to like me and one other person. And we started with like a group of 10 of us. So 80% of them have left either through like being let go or leaving that industry. And so, a lot of them have left, and it's just me and this one other woman that I started with, and she's absolutely killing it, but she's like a high flyer. And it's just like you think about it, it's just like you look to the left of you look to the right of you, and you're just like, man, like everybody's dropping like flies. It's like, so that's why I focused on dividend income. If you're not seeing 50-60% layoffs every couple of years, then why are you looking at doing dividends from the start, man? Like just try to get your growth in and then try to slowly convert to dividends in the future. Then you'll be able to buy more dividends.
I think it was 13K a year on $400,000. It seems crazy conservative. Like 3.5%. You know what I mean? Like that's like the dividend aristocrats and kings, or even not even all aristocrats. But yeah, that's what a dividend portfolio pays. Unless you're in like NRZ and all that crap, you know what I mean? Junk stuff. But that's what a dividend portfolio pays. 3.5% a year. That's it.
100%.
So it's I don't know. I just the great thing is I do have cash in my IB account. I can print money on demand, so I'm not worried about losing my job or anything like that. The dividend portfolio, $1,000 a year, $1,000 a month it provides on the taxable side, and then I can just print money on demand out of the IB account. But it's something to think about, right? Like I lay at night in my bed, which I'm always laying in my bed anyway, but thinking about that 400K in the PMCCs, or just in the IB account, right? Like trading options in there.
Would you potentially risk it?
I'd be doing a lot of
How much?
spying.
How much are you
QQQ.
thinking about it?
Yeah, since we've been talking about it nonstop.
Really?
Yeah, nonstop. Does that mean I
Because
ever would
you.
not do dividends? No. There's going to come a point where you have way too much money. You can't be managing it all. Like, why not just shove it into dividend stocks,
But would
right?
you just be doing it until March or April next year when you start to get to the point where you're packing your work boots up, or would that be something where you do it for, let's just say, the next 3 or 4 years and then switch it to back to the dividends?
No, no, I don't think I think for me, like I'm trying to just talk myself out of it, keep the dividends out there, and then just build the IB account even larger than it is now. Keep building that up instead of building the dividend portfolio up as aggressive as I was building up.
Right.
Um, and then because that money that comes out of the IB account can go into the dividend portfolio, right? If I'm generating 15K a month in that, you know what I mean? Shove 10 grand in the dividend portfolio a month, right?
Yep. I'm with you 100%.
So I don't, yeah, I'm not, I don't know. That's a tough one. I mean, don't you think about it every night?
No, I mean, I was doing relatively well, but I'm with you 100%. It's, I like that idea that that consistent income stream is going to come in. I do look at it a little bit more now where, I'll see a $150 dividend payment come in and I'm like, is it worth it? But then you think about it, you have 20 companies giving you 150 bucks here, a couple companies giving you 200 bucks there. And then you start realizing this is like, well, I haven't done anything to get those. And, you're kind of just waiting. But I mean, I talked a little bit about this last night. I would love to just have 40% of my net worth in QQQ, 40% of it in VTI. But at the moment, I just don't have that income, or not income, but that net liquid where I would be like, okay, that 0.6% yield coming from the Qs and the 1.8% coming from VTI is enough to kind of live off of, right? Like I need that 4 to 5 thousand a month, and then whatever I can make in websites and stuff like
Four to
that.
five
So
thousand a month is a crap load of freaking money invested, though.
yeah, it
You know
is.
what I
It
mean? Like
is.
it's so much money invested for a minuscule amount of money. It's hard to get over that because my real estate notes pay 7%. I think Patrick here is talking about syndicate. I'm just not interested in that. I know most of the time they're K1s. I don't want to deal with that. And the other thing is I want to have access to my money. That's one thing I learned about having rentals and doing flips and notes. It's like I have no say when I'm going to get that money back. And like I want to have access to my money. If I'm overseas, I want to have access to do whatever I want to do with it. That's just where I'm at. That's the reason why I'm probably never getting back into rentals ever again. The notes are getting bled out. I might keep one or two of those on the tax deferred side, but I'm not doing no more real estate. And I know that you are. There's so many people ask you about it all the time. You know what it is? It's because you've never done it before. So it's like, well, it's you know what I mean. Like I've done it. I have no desire to ever do it again. That's just me.
Yeah, I get poked a lot. Like,
Yeah.
I don't want to put people on the spot, but people are like, dude, like condos are still so cheap in Houston and stuff of the like. And I'm just like, I mean, they're right. They're not wrong, but it's just like, I'm with you. It's like, while I don't foresee myself in the next year or two just like picking up and moving, I've always kind of had that dream. But at the same time, it's just like I don't have any set in stone plans to be leaving currently. While I am doing relatively well, I still don't have the dividend portfolio and the dividends coming in every month that I could be like, okay, I'm cool with walking away from my 9 to 5 yet, right? I would still like to get to that 4 to 5 thousand. If I wanted to retire today and go to Asia, I could, right? There's no problem with that. Like go live in Thailand or something of the like. But I have my family here still, and I would like to be able to come back in the future and raise a family in the United States, and you can't do that off of $2,000 a month.
No.
So,
Come
so I
back
just
here
want to
and
make
live like a
sure.
poor man.
Yeah, like if I were to leave, I would want to leave at 4 to 5 thousand a month, and then I would still do that thing, get lost in Asia for a year or two, and by the time I did come back, I would have the ability, that 4,000 to 5,000 a month has probably grown, as well as the fact
That's the
that,
great thing about going to another country. You can geo over there and just build your wealth even more.
yeah, I mean, I'm still going to be doing the websites. I mean, I'm not going to retire, right? I'm still going to be doing stuff with websites. I'm still going to be doing YouTube. I'm still going to be doing everything that I can to continue to kind of build stuff. It's just I won't be working that normal 9 to 5. Not that I don't like it. I love it. But, I feel like the upside potential and being able to help people, which is my goal, it's my purpose, is to help people. I feel like it's better used if I don't have my normal 9 to 5 job. Yes, I help bring oil and gas to the market and help people get energy and so they can build their businesses and cook their food and heat their homes. But at the same time, like I feel like I don't get that direct communication. YouTube, I mean, we're talking to 43 people right now, and helping kind of get them and to the right financial mindset of going forward. So that's the way I view it, man, personally.
Pelt work. I mean, a high yield savings account's like 0.4% or something like that right now annually. Okay, so I can make that in one put, 1 week out, literally for the whole freaking year. So we're smarter investors than that, right? Like Matt and I, or anybody probably in this comments section is smarter than that. Like the high yield savings account is not. You're not gonna get wealthy off of that, right? That's just literally something to kind of hedge against inflation. That's all it is, right? So,
Wait, we're not going to get wealthy off a high yield savings account?
No. It's very hard to save your way to being wealthy. Okay? You have to have a super high income, number one, to do it. But you're literally like running against the escalator that's coming down, right? You're trying to run up an escalator that's coming down. That's literally what you're trying to do if you're trying to save your way into being a millionaire or being wealthy, right?
Yeah, you got to be like Dave. If you want to save your way to being a millionaire with high income, you got to be making that Dave money.
Hey, we both have high incomes, but we do have a bet, by the way. So,
do you want to tell people the bet?
Do you want to tell them about the bet? We can keep.
I was just trying to think how. We'll keep it between us until maybe it gets a little bit closer. I feel like it'll come down to the end.
No, I don't think so. I think it'll blow me away. I set myself up for failure in this one. So
just to make me feel better.
Yeah.
just to get my feet back underneath me.
Look, Petey, you got you're making like $500,000 a year off your freaking Amazon. I mean, I don't have that. Jesus. So no, that doesn't count. I'm not quitting my job yet.
I'll quit my job when we get this damn this passive income educator to 1,000 subs and that gets monetized. Then I'll quit my job. Until then.
What's the most recent CSP each of you sold? That's easy for me. My last one I sold was NVIDIA.
Use your words, Dave.
Yeah, I know. NVIDIA. I can't ever say that one right.
Let me see. I feel like I just had it open. I don't have it open. Yeah, nice. I don't have it open.
Spotify, Tesla, Netflix, Baba, Spy, QQ. Cost. The PFE is a poor man's covered call.
No. There we go. Let me see. CSPs? Yeah, I don't have that off the top of my head. If you were to just ask me any cover call or anything, I got that off the top of my head. But I was doing a lot of work on my rock.
Naked put's fine. You can throw that in there too.
Yeah, let's get in here.
What's the bet? Oh, what's the bet?
What's the bet, Dave? The bet is basically that Dave is the man and I'm not.
That is not true at all. I gave him a lot of rope
to hang myself with.
Yeah, I gave him a lot of rope there. Part of the bet was just to better ourselves and push ourselves a little bit in the next, who knows? Could be a year, could be 2 years, but hopefully it's not 2 years. But just to push ourselves a little bit further, and
sorry,
it's pretty fair bet, I feel. Because I'm going to fire, so I'm going to fire. That's really going to screw me over big time. So, Anyways,
let's see. I sold some puts on IPOE. I did Spotify, but I bought it back. Wait, what? Why did I buy it back? I sold it and then I bought it back immediately. I remember that. I'm trying to remember why. Oh, I just don't think I wanted to be in it. I think I was just like, you know what? So I lost $1 on that one but I just didn't want to be in it. I closed some Wells Fargo for profit. Opened a covered call on Johnson & Johnson. Some dividends here. Sold a Clorox put, 185 for March 5th.
Clorox. Yeah, I went to Clorox too. Which one did you do? I did 180.
I did 185. Damn, you did 180, David?
Yeah, that's high for me.
That's high, man. That's what I'm saying.
14% probably of the money, but it's Clorox. You know what I mean? Clorox ain't gonna.
Yeah, I'm with you there. The way I look at it is I love Clorox. Like I have a lot of Clorox. Well, I don't have a lot, but I have some Clorox and I have direct shares purchased with the company. So I would love to add 100 shares. Maybe not at 185, but I could always roll it. And I don't think it's going to drop too drastically. I also, this is actually an interesting one. So I had I don't want to say it was a leap, but November ARC-G. And what I did is that was I think a 30% profit. So I closed it out and I shortened it up. So I was like, it was like in November 2021. And so I just didn't want to keep waiting for that other 70%, right? And so I was just like, well, let me shorten it down to March. So I did that at the same strike. So I did 100 ARC-G strike for March, mid-March. I did that one. That was $360. All right. Can't complain with that. I bought back my Lockheed. I bought back my Adobe. That Adobe.
You buy everything back. We buy everything back. We just buy it for pennies on the dollar.
Yeah, I bought that Adobe pretty quick. I bought back my AMD. What did I sell that for? Oh, I tried doing SQQQ, but that takes up way too much margin.
Oh,
and
yeah.
So I bought that back for $4 more. I was just like, screw that, man. I was like, I wanted to give it a try because how do I say SQQQ is the opposite of TQQQ, and so my thought was over the long term, you can sell naked calls on it if you're able to sell it for 100%. So I was just looking at the previous SQQQ jumps when the market kind of pulled back, and I was just like, well, you could sell. My thought was if you're able to take the same margin requirement, so like let's just say it's the $100 strike or whatever, if you're only required to put up 25-30% like you are in most stocks for Fidelity, you could print money by selling naked.
You're trying to do a 0% probably in the money, like what Gerry does?
Yeah, well, it wasn't 0%, but it was like I was going to do 100% above the current share price. So I think right now it was at $12 or something like that, and I was just going to sell monthlies at like $24, and then come back in a month and buy it back because generally speaking, it's triple leveraged in the inverse, right, for QQQ, and obviously QQQ generally speaking always goes up, and so the thought was like, well, even if you have a bad month, the likelihood that it's going to increase 100% is pretty low likelihood. So even back in March, it increased like 80% or something like that. And that was really quick. So I was just like, well, I don't want to say it's free money because nothing's free money, but selling 100% above the current share price a month out looked like pretty easy money. But then I realized that it's using 50% margin, not 30%.
Yeah, whatever. The thing is that always, anytime you think you found an edge or whatever, it's like it's already been exploited. I mean, you're not the first person.
But SOXL is the same, right? Or is it 100%?
I don't know. I haven't looked at it.
I'll have to look at it again.
PMCC and this, the CC you did was in the money. Would you roll? We've been rolling. We haven't been rolling. We've actually been closing both sides out. I think all of us have been closing both sides out because your leap is going to be in profit, and your short call is going to be in the profit. So I've been closing both sides out and then opening another one. You know, I mean, technically, yeah, you could roll it. You're just kind of pushing your profits off until the next time it expires, right? What have you been doing, Matt? Have you been doing?
Get back in, what's that?
Have you even been
I
doing?
tried one on AT&T, and then I just gave up. I really wanted to utilize that strategy in my Roth, and
Yeah,
it doesn't look like I can.
you have different options though.
I may. Actually, that's a good point. Let me.
Somebody was asking me that earlier today in one of the comments on my video, and I don't know the answer to that because I don't have a Roth. Number one, number two, my retirement account doesn't have enough free cash in it for me to do anything in there anyway right now, so I can't even answer the question for him.
Generally
They don't need
speaking,
to
I
give me
know I
level zero
tried.
in there anyway, and if you can't do spreads with a level zero or diagonals or whatever it's called, calendar, I don't know what's it called, Gerry?
I have level 2 in my
In a
Roth.
retirement account?
Yeah.
Oh, that's odd.
So level
Or
2.
sometimes level 1 and level 0 the same, depending on the broker.
It's going to make me answer questions in order to see. So the level 2 is showing up here as buying calls, puts, which you could do at level 0, right? Long straddles and strangles. Wait, what?
Wow. This says long, though. You're not short.
Long straddles /
We're shorting.
strangles.
Or strangles we do are shorts.
And selling cash secured puts. So selling long straddles would mean I'm buying a put and buying a call, right?
Right.
Strangle, though, I mean, would I have to own the underlying? When you're,
Does
I
it say long
guess
strangle?
it says long straddle / strangles.
Yeah, so you're buying.
So how can I do I guess I have to have the cash to buy. Yeah, it's just a covered call then, I guess, with a short put that's covered by cash. There's no way they would let me sell a short put without having the cash.
I don't know if anybody knows the answer to that. If you have a retirement account, why don't you test it out for us? Because I don't know the answer for that, and I'm not going to be able to get it anytime soon. We do know what happens now with. We do know what happens now when a short call on a PMCC is in the money and gets exercised. We do know what happens now with that because Randy went under the knife and one of his got exercised. So he had what 5 Coca-Cola leaps on, and then he sold 5, like it was at the money or in the money, I don't know, Coca-Cola short calls against it. It ended up being in the money, and the broker assigned him minus 500 shares. So he's like literally short the position at this point. So when Monday comes around, he can either call his leap, exercise his leap, or he can just buy back those 500 shares. So it's a negative position in his broker right now. So that was good to get that out of the way because we're all kind of.
And when I've done it though, I mean, for me, what I've seen is I had my Apple. I sold the 129. I bought it at 127, 100 shares at 127 2 or 3 weeks ago. It rocketed up to 140. By the time it got to expiration day, I mean, I was paying 10 or 20 cents premium to buy back that short call. So, I mean, I basically just closed it out and I got pretty much as I wanted. And the reason why I did it is it's like, okay, I'll pay $10 just so I can get that weekend decay. Like, I was just like, I just want to make sure that it's like, I'm closing it out today so that way I can buy another 100 shares or something and put on my next short call. I mean, it wasn't a PMCC, but it's the same thing, right? I mean, you can easily just be like, all right, it's Friday, it's expiration day, it's, deep in the money. Your short call is deep in the money, I mean. And, you'd be like, okay, well, at this point, I'd lose, let's just say $5, $10. You could easily just close them both out, and then you can get back right in the saddle if you kind of know what next thing you want to do, and you get the weekend decay. If you're selling weeklies, that's hugely important. I mean, selling for next week, if you're selling, let's just say the Feb 19, you could have got, a crap ton more money. Actually, Feb 12 is probably a better example. If I sold the Feb 12 on Friday versus if I sell it on Monday, I mean, the theta decay there is probably easily 10%. So it's basically free 10% if the price opens the same as what it was on Friday, just based off the fact that it's got the theta decay.
That
So
3-day weekend there if you can.
yeah, I love the 3-day weekends, man.
Only short allowed. I thought you could do CSPs. Can't you do CSPs? Can't you do CSPs in a retirement account?
Yeah.
I don't know what's he's talking about. Only shorts allowed in covered calls. I mean, technically, a CSP is a bullish position, but yeah. I don't know.
Am I doing one right now? Hold on. What am I doing it on?
I don't know. I'm at level 0 in my retirement account in Schwab, but sometimes the brokers level 0. Some of them call it level 1. So Fidelity might call it level 1. They might even have a level 0. But I mean, if anybody knows the answer to that, in a retirement account, anybody has a retirement account here, put on a PMCC so we can find out, see if it'll let you do it.
Yeah, I'm doing cash secured puts on IPOE.
But have you tried to put on a PMCC in there?
In the retirement account? Yeah.
Yeah. It didn't let you?
I think I tried doing it on AT&T. So I think I bought the long leap call, and then I tried selling a short call for like the next week or something. And
it didn't think it was covered, huh?
Yeah, it basically said that you don't have 100 shares in this account to write against.
Interesting. So Sahib, I don't know what you mean by the CSP not allowed. The CSPs are allowed in there, so I don't know what you mean by that.
Yeah, I'm doing CSPs in my Fidelity.
He's talking about Canada, maybe.
Canada.
Yeah, our friends up north, the Great Northwest, or whatever the hell it's called up there. So you're not allowed to do CSPs in your retirement account, Sahib. That sucks.
That does suck. But it pisses me off though, because there's no capital gain. So it's just like part of me is just like, what do I have? How much am I making in terms of dividend? I can't access the dividends in my IRA anyway, right? So it's just like I have dividend stocks in my IRA.
UCCs, baby.
I can't touch that until I'm 59.
You can't even do that in there.
Anyway.
You know what? If I couldn't do PMCCs in my retirement account, I would just wheel in there then.
So my Roth IRA makes me about $4,000 a year in income, and it's worth $100,000 now. So I'm like, $100,000. I'm like, I mean, you could make that sort of income. So part of me is just like, do I just get rid of it and just try to grow it, right? Just try to grow that account, by selling at the money covered calls, because I have some good stuff in here. I mean, I got some Jeppy, I have Coke, but I've sold 100 or about 100 shares of Coke to sell for calls against. I have some LYB in here, which is almost deep in the money at this point. I have an $85 covered call. It blew past that. Now it's at $93 a share. But I have 102 shares of that, which I bought for dividend purposes. But it's like, I don't need it anymore. Main Street Capital I have in here. It's just like I could easily sell Main Street. That one's kind of been floundering. It's not. I don't know if it's going to recover anytime soon. It's small businesses and small business loans. I have my QYLD, my Virgin Galactic in here. I have some SPACs in here as well. One's Latch. I don't know if you know anything about Latch, but anyway, I have Verizon in here. I'm like, why the hell do I have Verizon at this point? Like, I like Verizon, but it's kind of been hanging out with the 55-60 range for too long, and I'm probably just like, I mean, that's $2,000 I can use to buy 100 shares or something. I like IBKR as well, but that's the problem is I can't touch any of this money for.
Hey, just go hog wild on it then.
30 years. I can't touch the money for 30 years.
No, that's not true. I mean, you can Roth ladder it or whatever you want to. I mean, there's ways to get out of it, but I don't. So Sahib here, Dave, average down a put, go against you, making you take a loss. Not when you average down. You talking about rolling? If you're rolling down, or are you talking about averaging down? Because averaging down is not a loss. I don't average down, by the way. I mean, I probably would if it depends on the position, but it's just Thumper's an average downer. I'm not. I think you're talking about rolling. So if you roll it, yeah, you're going to take a loss, but you're going to literally sell it for a premium that's more than the loss. So you're going to literally cover the loss right then and there, if done correctly, anyway. So is that what you mean?
You can get 1%. The thing that I like about buying these and the poor man cover calls is like, I mean, if you're bullish, if you think the stock is going to stay flat or bullish, you can collect 1% pretty easily a week. I mean, that's pretty awesome. I mean, you ask me. I mean, you're easily going to collect 20% a year, like we were kind of talking about. So I don't know, man. I mean, it's difficult to be like, here you have $100,000 Roth. It's just like you just have some of these dividends coming in, and that's nice and all. It's like,
I would just, like I said, once you quit your job, you're going to be in a lower income bracket. If you really wanted to keep your income like low, don't trade any options. Keep it below that $50,000 mark, and you're not going to pay anything on your Roth conversion. You know what I mean? So just take out a certain amount of money every single year, and then I mean, you get what, about a $12,000 standard deduction. You don't get married, but if you got married, it'd be a lot easier. And then don't just get married for that, though. By the way, and then convert. And then 5 years, you can take the money out tax-free, right, out of your Roth account. I don't have a Roth. I don't qualify for one. I've never, back when I qualified for one, I probably, it wasn't even a popular thing. Nobody even knew what a Roth was.
You wouldn't do a backdoor Roth, Dave?
No, I would do a backdoor Roth. What I'm saying is I would wait. I got to wait till I quit work to do that, though, because I'm in a high tax bracket, right? You don't want to be converting money at 35, 40%, right?
I see what you're saying.
It counts as ordinary income, I think.
I do. I do the 5,500. I have my traditional account. My traditional IRA has $1 in it. Like it's only whatever like I put it in the money, $5,500 or 6,000. I don't remember what it is now, but it's like $5,500 or 6,000 bucks now. Generally speaking, in January, and then by the end of the month or a couple of weeks after, I'll call them up and hey, can I do my Roth conversion?
No, I'm talking about rolling the money out of like a 401k and do a Roth.
Yeah, no.
Yeah,
I mean, I did it this year.
You don't have a 401k?
I do, and I just did that. But the majority of that money was Roth money, so I think only like 12,000, whatever I rolled over, wasn't.
Yeah. Well, they let you do an in-service. Do you guys have any experience on taxes from options income? So you're talking about mark to market, or are you talking about something else?
Yeah, my first experience with real options income will be this year. So
it's just standard. It's just short-term capital gains. If you're talking about mark to market, that's a different thing. I mean, it'll let you realize, like, it might make sense to you to do a mark to market this year. You have to, like, it's like a special form or something like that, because you can take that whole loss. But the thing is you probably have all the capital gains to write that whole loss off anyway, right? Or no? Do you have more than that loss in capital gains?
What's that?
Your loss that you took on GameStop, do you have more in gains than the loss? Realized.
But that's 2021, isn't it?
2020.
Well, GameStop
so you took it this year, huh? Okay, never mind.
Yeah.
I don't know
if I could apply it to.
Yeah, I don't know if you can apply it. You may want to look at it doing it the next year then. So you apply for mark to market or whatever, and then you can, instead of splitting out for $3,000 a year, which is like literally nothing, you can definitely. I mean, you're going to have, if you do everything correctly, you're going to have a crap load of capital gains this year anyway. So you can just write it off like, okay, $60,000. All right, 60,000 gone.
Yeah. Hopefully. Yeah, hopefully I don't have to pay taxes on it for a year or two.
No, you won't. Yeah, you're just going to write that off with that big ass loss you had.
Yeah.
So, yeah.
I don't know, man.
Oh,
So
wow.
are you ever going to get more risky at all, or do you think that you're going to
I'm in
potentially
capital
just leave?
preservation mode. You know me,
Yeah.
man. I'm only going to get risky because I want to win the bet, but
You'll win, man. You'll win.
I think it's funny because it was at James last night or whatever his real name is. I guess I shouldn't say his real name, but I won't say his handle at this point. But James is like, he's all, so you're not gonna get 24% just to win that $100 or whatever. I was like cracking my ass up. He's like, you're not gonna, go the PMCC route. Like
Well, that's the
kind
thing. How do I prove it though? Do I have to show you like every one of my
I'll
accounts
take,
and like?
I'll trust you. Jeez, come on, man.
Yeah, it's only $100.
$100, like, geez, you smoke that all
Yeah.
day long.
Yeah, it's true. I need to I'm getting close, man. I mean, yeah, I'm getting close. I need to clean up the spreadsheet a little bit because I moved some stuff around and my Roth especially because I have a bunch of that's the problem is selling some of these things. It's like trying to keep track of it, especially if you're doing like buying 100 shares of something and selling at the money. It's just like you might only have it for a week and then you got to put it into your damn spreadsheet. And so I mean, sometimes it's just a pain, but yeah, like right now, this could be off a little bit, but I'm less than 20% away from a mill, which is kind of cool. Um, but yeah, then, I mean, you
Don't
think
do any
about it,
more
I also,
GameStops.
yeah, no more GameStop, man. Yeah, no more GameStop.
QLD
But
has a core position to feed other dividend stocks over time. It's not something I'm interested in. Not with QLD anyway. Jerry's my go-to for this. All right, so Jeppy and Nusi. He says use Nusi. I'm not. I'm in a more of a capital preservation mode, so I'm not going to do anything risky like that where I'm not in control. I want to be in complete control of what's going on. So QLD is not something I'm going to touch. I think you're in it though. You like it, right?
yeah, I have a decent amount in QILD and JEPI, but the way I look at it is like once I get to that 4,000 to 5,000 a month, I'm going to deleverage out of those positions because I would rather have it's not that I don't trust them. It's just I would prefer something that has potential growth upside, whereas I feel like those will both be limited um, to how do I say it? For example, was it Jeppy last year?
That was brand
Jeppy
new.
in the last year, like I think the S&P was able to return 20 something percent, but Jeppy was only able to return like 18%. Gerry just did a really good video on this. And I'm like, yeah, you still get the dividend, but you're kind of capping your upside potential because they're writing covered calls against it, right?
You like
So
Nusi better. That's what I was talking about last night, I think. So,
yeah.
um,
So I might have
you
to
know,
look at that.
you
But
know how I look at QLD? I look at it as like an Inspector Gadget, like where it's like a ticking time bomb or self destructs. You know what I mean? Like that's how I look at QLD. Like you get in, you get your 10%, like hopefully like for a year or two, and get the hell out of the damn thing before it freaking blows up on you. That's how I look
yeah,
at it.
man.
It might be a bad analogy, but
No, I mean you're not wrong. I mean you look at the 2018 drop in December that it had, right? And then it struggled with that. It struggled in March, and it doesn't seem like it can ever really get back up to a point where it's growing long term before there's some sort of dip. And if there's a decent dip, that means the underlying is going to get screwed. And then when the underlying gets screwed for that month on pretty severe pullbacks, you're kind of down at this lower net asset value and you're just trying to climb your way back up. I mean,
But
it's
that's the issue that we all had with it when we really looked into it. I mean, Jerry, I'm going to use Jerry for this one, but it's like they're not completely transparent of what they do behind the scenes. That kind of drove me nuts. So we were talking about it the other day. Jeppy is a better bet, may not pay as much or whatever, but Nusi, he just mentioned it here, would be one I would look at before I'd probably look at Jeppy as well. I like Jeppy better. It's just the problem with Jeppy is it's so darn new.
yeah, I don't know. It's so but that's the thing is it's like if you owned the Qs, you could get more than 1% a freaking month. You know what I mean? Like if you're writing your own covered calls, you know what I mean? So it's just like,
It's not hard.
yeah, I mean, it's just like, do you just sell that money and you know, and actually, maybe I will do that. Buy 100 shares of the Qs.
What are you doing? I need to stay up with you.
Yeah, I don't know. Maybe I will do that. Maybe I'll look at it and in my account, I'll just, no matter what, I'll always have 100 shares of the Qs and just, yeah, I don't know. Or 100 shares of SPY. How much is 100 shares of SPY? Shit, that's like 60 grand if you do both.
Yeah,
I have a lot. I do have a lot in both, so I honestly could just do that and that's the thing. Like, if you sell, I would probably sell monthly. So now I'm curious. Damn it, Dave. See what you got me on.
What did I do?
Let me just see. If I were to sell, because I don't mind. I don't mind having 100 shares. So it's 33,000 if you were to buy the Qs, and then if you were to sell almost at the monies, let's just say you were to do monthly. So let's just do the March 19th.
It's like Chris monthlies. What'd you do? I love that movie. What'd you do?
So the Qs. Ooh, David. If you were to sell at the money, 989 divided by 332. David.
I would advise you not to tell me the strategy. No, I'm just kidding.
I mean,
tell me the strategy.
For March 19th at the money, 332.
What's in the box?
What's in the box? Yeah, I mean, you're getting. Ooh, David, hold on.
Jeez.
Sorry, I don't know. I'm just getting kind of excited. I mean, even if you can just own the Qs, like, what the hell am I doing? Why do I have QLD and Jeppy at this point? Hold on.
Because you want that fat freaking dividend. It's so darn juicy. That's the reason why everybody was in NRZ and CCL and all those freaking stocks they shouldn't have been in on a bull market. But
even if you sell, let's just do the 70% chance of profit. 772 divided by the 332. Yeah, you're getting 2% a month.
What are you trying to do? You're just doing CSPs?
You're owning the Qs 100% share, 100 shares outright.
Okay. And then what?
And you're just selling it at the 0.3 delta.
You're wheeling it.
Yeah, I guess you could look. Actually, shit, that's a lot more than the 0.3 delta. That's 0.44. But I would sell at the 70% chance of profitability. You get 2%.
So you're just wheeling it. You're selling at the money. It gets called away. What are you going to sell a put, or are you just going to buy another 100 shares? What are you doing?
I would just buy another 100 shares.
Okay. That's there's so many options.
So much opportunities.
There's so many
trying
options.
to think, if you sell, I mean, I would look at it probably. I would just say, how likely is it to move 10% in a month? And I'd probably sell.
It's more likely. Yeah, it's pretty. I wouldn't say it's like. It's likely, not like 10% in a week like we had last year. That's pretty unheard of. But 10% in a month, that's.
You wouldn't make nearly as much.
If you think about like 2020, was it 2019? 2018 or 2019 when we had that 20% decline about a month?
Yeah, that was 2018. Wasn't 2019? It
was about a month, a little bit over
December
a month.
2018,
yeah. October through December or whatever. October, November, yeah.
It was real steep, and there was like I moved all my money back on New Year's or Christmas Eve, and that was like the play.
Oh, I played it good. I was out, and then I got yeah, I played it fine. Let's see. Let's see here. What do you go? Blah, blah, blah. I think doing your own calls are better than those. Yeah, I agree. Because I don't know what the hell they're doing behind the scenes. I'd rather be in control of that. And like I said, QLD is like, I know it's a popular one. Like everybody loves making videos. A lot of people get a lot of views and all that crap. But to me, it's like a ticking time bomb. I've already said it once.
I might have to do that, man. I might have to get rid of my Qs and just do that every month. Just let me see what I can do on SPY though. I don't know. Would I do it on SPY? Would I do it just on the Qs? I mean, I don't know.
I like the diversification. I mean, a lot of the QQQs are probably in the SPY anyway, but
yeah. I'm with you. Hold on, I'll just check. If you can get about the same on SPY, I would probably just do it all on SPY. Hold on. So
Well, QLD is like 10% a month, or excuse me, 10% a year, right?
Yeah, so 832. Yeah, you're definitely not going to get nearly as much on. Yeah, you're getting about 80% as much.
Doing
on
what?
SPY.
On SPY.
Yeah, so you're getting $8.32. So about 2% in a month, versus you were getting like 2.5, a little bit more than 2.5, doing it on the Qs at the money. But I'd probably just do slightly out of the money. I'd probably do it at the 70% chance of profitability. So that way you get a little bit of capital gains in there too.
I feel like you can get a little more riskier with those.
What do you
mean,
mean,
if
a
you
little
already
more
own
risky?
it anyway, right? Like, what's the difference, right? You're already, if it goes down 10%, you're good. Like, you're happy with that anyway, right? What's the difference?
So sorry, what was
I
that?
don't understand. Like, if you already own 100 shares anyway, you're not worried about a 10% decline, right? I mean, what's the issue here? You just talking about replacement for QLD, or I mean, what do you?
Yeah,
You own
yeah,
QQQ now, right?
Yeah, in my M1 Finance.
Oh, you can't do calls. Yeah, you can't do
Yeah, you
anything.
can't do calls in there. So yeah, part of me is just like, do I
You need to get it
stay
out of
QLD? And yeah, I've thought about actually, once I get enough of those positions up to, let's just say 100 shares, transferring them out. So that way I kind of like can always just kind of like move it over to my main account. But then that kind of removes the passive aspect of it. Anyway, I don't know. But yeah, I don't know. What would you do? Would you keep it in? Would you have it in JEPI and QYLD, or would you just sell out of those positions and write your own positions on it?
That's the reason why I was like, this is last year when Gerry brought it up. That's the reason why I wanted to know what QILD was doing. And when you look in, behind the covers and lift up the bonnet and all that crap, it's not like literally there's spark plugs missing. I mean, everything's missing out of it. You don't know what the hell they're doing. And they're not entirely clear in the prospect or whatever it's called, what they're doing. I don't feel comfortable with that. And JEPI, JEPI's a better, what's JP Morgan, right? So it's a better reputable company, but it's so new. I don't know what it's going to do either, right? So I think Gerry sold me on Nusi, but I don't know. To me, I got to be in control. I'm not a control freak, but I want to be in control. You know what I mean?
Yeah. So I feel like in a slightly sideways and slightly sideways and bullish market, I feel like it's more advantageous for you to potentially own the individual shares themselves rather than own QILD and JEPI. But if you are in a bearish position, it's almost like they're still somehow able to generate, about 1% a month, at least for QILD they have been, even on when they've been able to or have to pull back. And so I'm just curious. It's like, I mean, do you just kind of stick with that? Because at that point, then you're holding 100 shares of, say, SPY, and you either don't want to sell it at below break even, or you're selling covered calls below your cost basis, which then you could potentially lose money in that respect, just to try to make money during that time period. So I don't know. I'm not sure.
It's like you need to just weigh all the options because there's so many different things you could do. How do you cover your downside? How do you make a decent amount of upside, but not blow yourself in the foot?
Or do you do kind of what Stock Ninja has always talked about, which is taking some of that premium and have a drag on the portfolio where you're buying puts?
Honestly, I'm not worried about the downside. Like my dividend stocks, I don't have time, but I mean the dividend stocks are what they are. Like that is a defensive portfolio. It's not going to go down as much as the market goes down, period. But I mean the thing is that's the way I look at it is the market goes down, like that's a buying opportunity. That's going to make you way richer than you were before the market declined. That's the way I look at it, right? It's almost like a good thing. So I'm not looking at that way. I just don't. I want something that I know what the hell's going on, right? QYLD is not that. I don't know what the hell it's doing behind the scenes, and it's not predictable.
Yeah,
I don't know.
I like it because it's kind of, you can kind of say, okay, I have 10% coming in a year.
Yeah, but we can get that pretty easily doing other things.
Yeah,
And
but
you're
that's the
not
thing.
at
It's not
risk.
coma money, right?
It's not coma money, but you're at less risk though.
And you're not limiting your upside too. Well, you kind of still are because you're selling cover calls relatively.
At 10%, I don't care about the upside. That's me though.
Wait, say that again.
At 10% yield, I don't care about upside.
Yeah, I was looking at it as like taking your 10%. The way I look at it is as QLD, I get my 10%, I'm putting in other shit.
Yeah, I mean,
I'm not
people look at
reinvesting
that
in
like
anything.
capital appreciation. Honestly, is not something I care about very much.
Yeah.
I care about getting a certain percent off of it, kind of like income, right? I'm not gonna Kevin O'Leary. You know what I mean? Like I need a capital preservation, but I get a decent yield I can live off of. That's still going to outpace inflation. Plus, I can still draw 4% off of it or whatever, right?
And that's kind of where I'm at. It's just like I want to have those QLDs and JEPIs give me off that 8 to 10% a year, and then once I get to the point where I'm making that 4,000 to 5,000 a month, it's like, well, I can get out of those positions. But now I'm starting to think it's just like, well, if I can make more growth in the portfolio where I don't necessarily need those dividends right now, I could just do the SPYs and the QQQs and then selling slightly out of the money, covered calls on those positions, and make my 2% a month off of that. I mean, we're talking a couple $100. We're talking, if I was able to do one contract on each, we're talking $1,500 a month extra income, which, you're talking almost, on that. I mean, you're talking 70 grand worth of stock, $72,000 worth of stock that you're writing contracts on. Just own 100 shares of SPY and 100 shares of the Qs, but yeah, I mean, you're able to make $1,500 a month. I mean, looking at
How's
the
that
money.
any different than what I'm doing on VYM? I mean, you know what I mean? Like it's the same damn thing.
This is more liquid than what you're doing on VYM.
Yeah, and I think it's also there's more risk there too with the QQQ.
There is. Yeah, you're right. Would I just do it on SPY instead of like having to manage two different ones? You just do two SPYs.
This is an interesting one because the answer is I don't think there's option. No, I mean they're doing options for you, so
Yeah.
And you don't know what they're doing behind the scenes. I don't think there's options on QLD, so yeah.
I don't know if they're doing like.
Nobody knows.
I don't know.
They probably don't even know. So yeah, is QLD okay for people who are learning options? No, it's not good for that at all because you're not going to learn shit about options.
Yeah, you're not going to learn anything. You're just giving them your capital, and they're putting some money into the underlying positions and the Qs, and then they're writing covered calls against
they say
it.
they're doing half the money. So yeah. I'm like, well, how does that protect you?
Or they're doing it on the index? I forget what it was. It was like they're doing it on the index. They're not even
funny thing. Like, if the market goes down 10 or 15%, how do they make money? Right? Like to pay their 10%. That was the issue.
Which is why I think it takes a while. Like I forget what QYLD was at before March 2020, but I think it's just getting back to the same price that it was at before March 2020. I mean, the Qs have blown past that, but what was it, like August of last year? I mean, it was basically at all-time highs again, and then it started blowing past it by August. And the QYLD, it's just kind of getting to that point. Let me check.
Answer your question, Petey. I have everything drips turned on everything. I know some people like to just turn it off and then kind of reinvest and all that into the stocks they want. But if I was in a coma tomorrow, I can sit in a coma for 10 years and the drip's turned on. I get out of the coma and I can pay the hospital bill, right? That's just the way I look at it. It takes too long to build up another position with not drip turned on. Like the money's just sitting there. It's not doing a damn thing for you until you reinvest it.
Yeah.
It's just me.
So to give some folks some context, so QYLD, which the underlying is basically the QQQ, was at $24 and so in February 19th at the peak of the market last year, and it's at 23.55. So overall, over the past year, it's down 2%. Whereas if you go to the Qs have obviously made money over the past year. The Q is up 44% versus last year. The Qs were at 236. Holy Jesus, 236 last year, Feb 19, and it's at 331 now. So I mean, you're up 44% versus QYLD is still down versus last year. This time last year, right? So you're thinking about it, you're massively capping your upside potential for it to be able to get that 10%. 10% dividend.
People aren't buying it for the upside though; they're buying that for that income.
Yeah, you know what I mean? Yeah, I know. Yeah.
I mean, I would. Yeah, I mean, if I knew something, if I knew it was more stable or whatever, yeah, I'll take 10% all damn day. You'll double your money in 7 years. You know, it's like whatever. Do you earn more premium from selling puts or calls? Puts by far. It should be puts by far. And the great thing about puts is it's like it's more comfortable than the calls.
More comfortable, man.
So I like to be comfortable. You know what I mean?
Every time I put on a naked call now, I'm gonna like have flashbacks like me staring out downtown,
standing on your squatty potty, and yeah, this is comfortable.
Yeah, fuck, man. I don't know if should I ever sell naked calls again? I mean,
I can tell you this. It's not that you guys scared me or anything. It's just, it's like I realized with the stuff that I was doing on, I'm like, all right, I shouldn't be doing it like on that. So I haven't. Pretty much now, if I put a call on, there's always a put on the other side, so it's a strangle.
So that way, if it does go close to in the money on your naked call, you can close out your put and at least buy back your.
Honestly, it just feels better because it's like yeah, it really, because the funny thing is that it goes down. It's like the one side's always up 80% and the other side's down, right? Like, well, I can take it off, but why would I take it off? Because it has to literally it's already gone against me. Why would I take the other side off? I'll just let it expire, right? Like it's just a feel good measure, I guess. I don't know. It's free.
Well,
it doesn't cost you any buying power either.
For me, the times where it's just like I get stupid. Like I literally just like I'll sell 2 contracts or 3 contracts on this, and it's just like. I put no thought into it. It's just like, that's when I get stupid. It's just like, I don't put any thought into it. I'm just like, I'm literally gambling at that point. And that's what hurts me. It's like, if you're concise, you think about it, you're like, look, I don't think based off the charts, there's no earnings coming up. There has to be some massive amount of upgrades or something like that that'll move it this amount in this amount of time. It just doesn't make sense. I mean, in the downside, you're generally speaking protected. Like you mentioned, generally speaking, stocks are more likely to go to the upside. So on the cash secured put side, I mean, things are more likely to rebound than continue to go to zero. Granted, every company, I mean, this might scare some folks, but every company will eventually go bankrupt, right? There's always going to be a company that will always go bankrupt, right?
No companies. Well, Apple's not going to go bankrupt. Well, they almost went bankrupt in 1990 or in the 90s. Thankfully, Microsoft bailed them out. You know what I mean?
But every company is going to go bankrupt, right? At one point,
yeah, there's like a paradigm shift, right? Like a major paradigm shift. Tech's never going to go out in our lifetime. I mean, but think about the paradigm shift that happened, right? When the Model T and the cars came out, right? What about all those people that made horseshoes, made saddles, made wagons? They're all out of business. It wasn't overnight, but they're all out of business, right? Yeah. It's all about cars now. So that's a paradigm shift, right?
But just like taxis in New York, right? Like people aren't ordering taxis in New York. People used to love living in New York and getting their medallions or whatever they were called for taxis, and now they can't even sell what they bought those medallions for pennies on the dollar because of what happened with Uber and Lyft and you know, it's sad. Things change, and every company will eventually go bankrupt, right? It's just a matter of time. So
It's hard to think about, but yeah, I mean, think about like Kodak and Fuji and all. I mean, I used to take freaking film down to the drugstore and get it developed and stuff. You had no nudies in there, right? Like, I mean, the thing is all that stuff is gone. Like, we have all digital. We don't even freaking have real pictures anymore, you know? Like, we just keep them on a freaking disc, you know?
yeah, even Bezos said he's like, Amazon's gonna go belly up one day.
Yeah, it won't happen in our lifetime, but
it won't happen in our lifetime. Yeah,
no,
I agree with you.
It's just not a long enough. But you know, Philip Morris, I mean, yeah, or you know, Altria, I don't know about those either. But oil's not going to go away in my lifetime. Which brings up this question here: I literally almost averaged down completely 100% in ExxonMobil. So
yeah, my cost basis is $53. I was buying when it started hitting the 70s. So
you're at 53?
Yeah, unfortunately. Yeah, I'm at 53
for ExxonMobil. ExxonMobil. My ExxonMobil average. The hell is that some bitch? Oh, right here. My average between the two accounts is 44.
Hot Dave.
So, I mean, I literally almost doubled up the position. Like, I'm doing the freaking videos on. I'm like, I'm an idiot not to buy this. I know that you got the Tesla bulls out there. Oh, yeah, I mean, the Zennials and the Millennials and whatever comes after that, right? The people haven't even been born yet. Think that Tesla's just going to take over tomorrow and oil is gone, right? Like, what about all those plastic parts that are in the Tesla? What is that made from, right?
Yeah, I was looking at a report. It's like, I think oil production is about what it was last year, 95 million barrels or something like that.
And demand's going up.
And demand has gone up.
Demand's going up, exploration's going down.
Yep.
Production's going down. So yeah, I don't see it happening. I'm sorry, I know that they just wanted to accelerate. They want to accelerate 50 years in literally, 1 year, which is not going to happen, but sorry.
It costs a lot of money, man. Yeah, it costs a lot of money.
Try to burst your bubble. The Tesla bulls. It's not just the Tesla people. It's just the younger kids that don't even know how to drive. They don't know how to drive an automatic, let alone a stick. They don't even know what that little thing is in the middle of the center console. So, yeah, you don't sit on that, by the way. Let's see here. Doing the strangles gives you a max loss position. Yeah, okay, we got that. Was there any other questions in here? It's been 3 hours.
It's been 3 hours, huh, Dave?
Yeah, it's been 3 freaking hours. I don't think I said. Yeah, last call for questions.
Man, now you got me thinking if I should just liquidate all my JEPI and my QILD and damn, Dave.
What's this one?
I mean, my JEPI. I got 30 grand in JEPI in my individual brokerage account. I could buy 100 shares of SPY tomorrow, and yeah, I don't know, dude.
I have a sex film on the internet. No, I'm just kidding. I don't. Everybody has a sex tape on the internet. Let's see, can I buy a full barrel of oil just for fun? Yo, you trade the CL. They'll send you a barrel of oil if you're in the money. Oil, that's always the joke, right? Because the future is literally like, if you screw up, they're gonna send freaking oil barrels to your house. They'll be sitting at your freaking, you're on your porch. But
damn, Gerry's selling.
What
really, or are you just pulling my legs?
Oh, let's see. What CSP calls you looking for next week? Honestly, I really don't run. Like, I have a watch list that I go through, and that watch list is all the stocks. Let me see. Can I share this screen out? Let's see if it'll let me. Yeah.
Stonks.
Yeah, let's see. You see that?
Yeah.
Of course, it's right when the time when IB is not connected, but whatever. So this list right here is the list on my watch list right now. Like, and there's some stocks in there that I like, Etsy and Beyond Meat. There's some shit stocks in there, right? I think I got rid of SP or space or whatever it's called. But so these stocks in here are my watch list. So that's a lot of stuff I would trade. But right now, these are all the positions in that I have on right now. And these are all PMCCs down here. These are all the long leaps. And then all the short calls are kind of mixed in throughout here. That O right there, that short call is a PMC. It's actually in the money. So I'll probably end up closing that out. But so when it comes to, let me see if I can unstop or unshare this. Here we go. So I don't really look ahead of time. A lot of times I have a scanner down there at the corner. Instead of 20 billion right now, I might even raise that up. Stock Ninja's even talking about going 100 billion and above. It's like, Jesus, you know? So no, I don't really look ahead of time anymore. I'm kind of just willy-nilly. I take something off and I'm going to put it back on. I don't wait for up days and down days. I used to. It's actually a really good practice, but a lot of times you're just going to wait around. But I do try to take advantage of a 2 or 3% down day or week. I definitely try to take advantage of that.
For sure. Yeah, for sure. No, I used to do the same. I used to be like really slow, being like, oh, well, maybe I'll sell a naked put, you know, and I wouldn't like look at how much buying power I had left and stuff like that. That was like when I was first kind of getting started. Now I'm like, I always have something on. So now I'm just like, oh, this looks like it's a good opportunity. You know, it's kind of hitting the bottom part of its channel. Been down for a little bit. I don't think that it's necessarily has any reason to be down. It would be something that I wouldn't mind owning. Put the money on and wait for it to return, you know, a couple percent. And if it returns 50% really quick, I'll take my profits and run. But
It's a good practice just to say that.
The strategy
like,
worked out really well, man. It's just when I deviate from it.
Do you manage to record it? So Gerry made a video on PMCC. I'll probably make one as well. So he did make one last week. Did you manage to record a PMCC? You could go to Gerry, GW Life, excuse me, that's his old channel, GW ETF channel, and he did a video on it in there. But I'll probably do one this week as well, just because I need to put Johnson & Johnson one back on.
So what stocks are you looking to build out? I didn't finish your video today, by the way. I need to finish it. But what stocks are you looking to build out 100%? Just VYM?
Yeah. I don't know. It really makes me think about that portfolio, though. You know what I mean? PMCC's in there.
But no, you're working. You know what I mean? Like, that's the thing I don't like. Is it's like you're working for that, and it's just like.
Yeah. No, I like it. I think in order for me to not go that route, like, I really need to focus on my IB account and then build that up. Like, I need to get that money back from the flips. I need to do, you know what I mean? Like, and then I don't have to worry about, all right, fine. You're sitting out there, because I can't imagine doing options with $1 million account. It's just, you know what I mean? Like, give me a break. That's just, it's already hard enough as it is now. You know what I mean?
I mean, you said you're managing 85 contracts. I mean, that's difficult.
Yeah, that's what I'm talking about. Can you imagine, like, 4x or 5x in that?
But I mean, would 85 contracts, 40 different positions, you said?
Let's see. I have 36 on right now, 84 contracts.
Yeah, 36. I mean, if it were me, I would probably do closer to 20 different positions to try to get 5% or so of each.
I mean, you could go up to a little bit bigger stocks like Amazon. Well, I mean, I do Amazon now, but you could just, do those consistently and stuff. But I still want to get to a point where it's also less riskier and there's a little bit more hands off. So that's where I go to the Qs and the SPYs. I'm just probably doing like
SPYs,
10
man.
or 20
I feel like that's super, super hands off. And then all you have to do is turn on the news and you kind of have all the news that you kind of need, right? It's like, you don't need to worry about individual company and stuff like that. Like, you just have to worry about the macroeconomic environment and kind of just live that way. But yeah, I'm just like, how much money? I'm wondering how much money you can make if you just sell strangles on, 10% on either side of SPY or Q on the Qs, and I feel like that might be good enough.
He's Patrick here. Keep it to 10 positions and make it so it depends, right? Like 10 positions, that's 10 stocks, right? Like you give me 10 stocks that you feel comfortable with sticking $1 million in. You know what I mean? Like that's some shit right there. That's some scary shit.
Let's do it all on BYM. That's what you do.
I mean, I'm not having $1 million. I'm just saying, like, if you built the account that big, right? That's you'd be bringing in buku dollars, but at the same time, like it's a lot to manage. 10 positions, okay. Well, then you think about it. There's a lot more risk in every one of those positions, right? So, what's your first move tomorrow morning? Yeah, I'm just gonna look at stuff. I run a script. The script basically orders every position I have, and it looks at the percentage of profit, right? And it orders it from greatest to least. So I start taking off those when it starts hitting 80, 85, 90%. Boom, boom, boom. I'll take those off. I'll find out what positions I got taken off, and I'll work on putting them back on. That's what I'm going to be doing. Any last words?
I think I'm good, man. I appreciate you having me on, man.
I enjoyed, I did watch part of the Super Bowl. Like I said earlier, the time, I know it just was right. Is what it is. Next week we can come back and not have to worry about the Super Bowl. I don't even know who won at this point, so don't ruin it for me. No, I'm just kidding.
I know you taped it, man. I know you're going to be watching it on rewind, and I think I can guarantee who won.
I don't have a VCR anymore, so.
VCR, what's that?
Yeah, exactly. Well, I don't. There's not any more questions. I do thank a lot for coming on, Matt. I appreciate everybody coming in here and asking questions, and Gerry helping out, answering questions on some of those other things in there as well. So let's go ahead and end it, Matt. Thanks for joining. Go ahead and take a look at Matt's channel. I'll put his channel down in the description after this gets posted. So. All right, everybody. Well, good luck tomorrow. Good luck next week. I'm killing it. Matt's killing it. Well, Matt's always killing it. So
I'm trying to get back on it.
All right, everybody. Take care.